Hey, everybody. Thanks for joining us today. Andy, how are things going?
Doing good, brother. Good to be here. Nice to see you again.
Good to see you again. It's been a little while. We recorded our interview probably towards middle of last year, or towards the end of last year. And I think it's been a pretty wild ride in your universe since then.
Say the least.
Tell us about how, like you told me, I take credit for this. Actually, I tell everybody when I talk to somebody, I say, oh my God, Andy told me like 6 months, a year ago, I don't know when it was, that silver was going to go crazy, that the COMEX in London was about to get cleared out. So talk to me about how your life has been since, gold and silver are hitting all-time highs.
It's just becoming insane in the respect that you have a growing realization. Look, there's an entire school of investment theory called wave theory, which speaks to the masses and their emotions that are driven by fear and by greed. And we haven't even begun to really tap into the masses yet, but even just experiencing this rush of emotions by the people in the hard asset community and the slightly growing and expanding footprint of said community, it's been extraordinary. It's been extraordinary in the respect that after 36 years of doing this, to see gold and silver finally begin to become legitimized. In I guess that's not even fair to say, because the mainstream quite hasn't legitimized it yet, but the people around us here really legitimizing it, really understanding that, hey, we're right. And we decided to come up with theories and beliefs that were rooted in logic, rooted in economics, rooted in mathematics. It was very frustrating for a long time for these things to be disconnected from outcome. A disconnection between logic and outcome have been difficult for a lot of us to take, and a lot of people fell off as a result. The I guess you could say the lack of correlation frustrated a lot of people, but for those of us who have had strong fingertips who can hang on, it's been an amazingly wild ride. And if you listen to guys like Rick Rule, who will tell you still that the allocation of precious metals and precious metals equities is less than 1%. It was a 0.5%. It's growing,
right?
But less than 1% of the entire financial matrix, from Joe and Jane Sixpack to the Harvard Endowment Fund. You can only imagine if that just becomes 5%.
Wow.
Or 10%. And most financial advisors would tell you 5%. Yet you have the chief investment officer of Morgan Stanley saying, the 60-40 rule, 60 stock, 40 bond that we've had for 50 years on Wall Street, it's broken. Sell half of your bonds and buy half, put that other 20% in gold. You got the highest up saying, hey, 20% of your money should be looking into this industry. The potential is ridiculous. So it's been a wild ride. It's even hard to try and explain it. I hope that encapsulated, but it's just beginning.
Yeah. I mean, that is, I think the takeaway is that a lot of people might look at like the way that the stock market goes up and down, the way that the crypto market is very volatile. This is like a long-term trajectory that's had a lot of opposing forces. So talk to me about like, where do you are we in the beginning of the phase of seeing more of that asset allocation into gold and silver or precious metals because of the basically printing of money combined with sort of volatility from things like maybe artificial intelligence, robotics? Like what's kind of driving the sort of fear that's pulling people, or whatever the aspect that's motivating them to buy silver and gold right now?
I don't know what their motivation is, to be honest with you. My focus has been for the last several years, first on the central banks, who are the most well-informed and well-funded, but I highlight well-informed traders in the world. And in the past 8 years, 7 years, it's been the focus of every podcast I've ever done. The biggest money in the world is finding it relevant enough to de-dollarize, to sell treasuries, and to replace it with gold and silver. They are assets that are simultaneously no one else's liability. It's deeper than that, though. And what really, I think, over the last year has been the catalyst of not only my, I guess you could say, realization that this is for real, but also an increased awareness here in the country is here in the United States, rather, being that we're in Canada. I should clarify that. Um, what we're seeing on COMEX is akin to 4 feet of snow in Death Valley in July. And they're not going to build snowmobile facilities or snowmobile shops in Death Valley if that's the case. It's an anomaly. What I mean by that, every single month, month over month over month over month, for the last 15 months since Trump won the election, we are seeing deliveries into COMEX and gold and silver that defy logic. That every single month seems to be a new record. In the month of December, 68 million ounces of silver were delivered onto COMEX, and that's the largest December delivery in the history of the COMEX. But that's every month. Between 40 and 60 million ounces every single month. And in gold, you're talking between 2 and 5 million ounces every single month. So you're talking billions and billions and billions and billions and billions every month. And not a word from anyone in the mainstream. Now, these people who do this is the bottom line with all of this. It was the central banks for the last 6, 7, 8 years. And now it's still the central banks. Not only are they buying it, they're repatriating it, bringing it home from the Bank of England, which would give access to the LBMA, or from the New York Fed, which would give access to the COMEX. But now you're seeing the most well-informed traders here in the United States that are buying so much gold and silver and taking possession. The COMEX has never seen anything like it. And I guess what also gives me belief that it's for real is the lack of any media participation in any of this, telling us what's really happening. There's a fine line between conspiracy and reality, but I believe that the lack of real journalistic integrity, aside from someone like yourself, on the mainstream, is a signal that the money that is doing this is big enough to bring in what amounts to hundreds of billions of dollars worth of stuff. And at that level, they do not do this stuff for the hell of it. They're probably big enough to throw a curveball to the mainstream. And I'm not trying to be a tinfoil hat wearing person, but I will tell you that this deserves attention because it is laying the foundation for something very, very, very big. And ironically, after all of this metal comes in, what do we see with silver? It's now a critical mineral. And what did the government just say? We're going to put price floors under it within the next 90 days. So these things are happening. They're happening in real time. And if you choose to open your eyes and see it, it's life-changing. I do believe that.
Yeah, and we're not really. I mean, the key here is that this is still an active thing in motion, right? We're not necessarily like the catalyst hasn't taken place and now, oh, okay, we've seen this price increase and now, oh, we're done with this. It's like there is an activation in the marketplace that's taking place. What I want to do, Andy, is just show a brief clip from the documentary where you talk about the trillions of dollars that we have entitlements and sort of some of the underlying reasons that we're seeing this inflation and why there's this run to precious metals. This is just a quick 50-second clip that's from early part of the documentary.
We will have a $2.5 to $3 trillion deficit again this year. We have a $37 trillion debt, but that excludes Medicare, Medicaid, Social Security, and government military pensions, which amount to somewhere in the neighborhood of $175 trillion. Indebted, off balance sheet. So we're over $200 trillion in the hole. The average price of a home in 1960 in dollars was $17,000. Gold was $35 an ounce. It would have taken 485 ounces to buy a house. Now those 485 ounces of gold are worth almost $2 million.
It's hard for me to keep the edit up to date because now it is over $2 million.
Well over.
Well over. At that time, it was probably like 1 point something because when we recorded, I think gold was at 3,200 and now we're, 5,000 or whatever.
Well, think about that though. The average price of a house now in 2026 or last year, 2025, is just shy of $500,000. Call it 500,000. And that gold's worth about $2.5 million. So while the advisors say, well, it doesn't pay you any interest, why the hell would you own it? And you stuck it under your mattress in 1960 and it's earned nothing but dust for the past 65 years. Guess what? It buys you 5 houses. So in dollar terms, yeah, your house has done very well. It's appreciated, hugely in dollar terms. But what gold offers, I think, is the realization that your house didn't go up and nor did gold. It's the dollar that we measure things in has fallen precipitously. So if you save in dollars, everything is inflating and your dollar is acting like a melting ice cube. If you save in gold, everything is deflating and your dollar is acting like, savings instrument on steroids. And that's really the idea in all of this, is that gold is wealth. The dollar that we hold things in is really a poor vehicle for savings or retaining value over time.
Right. I had once seen a chart that said something like if you adjusted the S&P index for the inflation that we've had, that the actual gains almost turn into sort of like 5 or 6% over a 25-year period, versus when you look at gold and other things to the point of that clip, you're actually exceeding inflation. You're storing value more. And I always say that, like, folks who think about their homes, right? Maybe they bought it for 90,000 in the 90s and now it's worth 800,000. Well, you get no more buying power out of that because the house next door is the same price. So you really haven't gained much of anything, and you have to pay capital gains on that. A little later in the documentary, we start to talk about the great financial collapse and some of the other catalysts that take place and actually drive us to where we are in inflation today. I want to show a clip about sort of the failures in our international policy. So there's a pivot that takes place after Nixon takes us off the gold standard in 71. And then we move on to the petrodollar and start terrorizing the Middle East on that. So there's a really cool clip that you have here from the documentary. This is about an hour 30 into it. And here you are. And Zach's in this as well. So here we go.
Until now, the United States has maintained U.S. dollar dominance and reserve currency status by forcing our will through the end of a barrel of a gun. That is not what we want. We want the U.S. dollar to remain the reserve currency, but we want to do it based off of having real backing.
Say what you want about the United States. I'm a patriot and I love this country. And I thank God I was born here every day. But look at the way the world looks at us. We invaded Iraq 22 years ago. There's weapons of mass destruction there, they said.
Saddam Hussein is a homicidal dictator who is addicted to weapons of mass destruction.
There is no doubt that Saddam Hussein now has weapons of mass destruction.
The facts and Iraq's behavior show that Saddam Hussein and his regime are concealing their efforts to produce more weapons of mass destruction.
Oh, sorry, we didn't find any. We destroyed your country. We've toppled your regime. And guess what? 22 years later, we're still here. And we are sanctioning 14 of their banks for having the audacity to trade through Iranian banks to buy liquid natural gas. So they're sanctioned. They're not allowed to hold their own oil revenue. We hold it in the Federal Reserve Bank in New York. At the end of 23, they asked us for $1 billion of their own money. And we said, it's yours, we'll give it to you, but come back to us in 2024. It's a bank.
So a little bit of you there explaining that. And I think it's incredible to think about, the movement we've had globally, everything we've done. Talk to me kind of what you see in the global landscape right now that's driving increased attention to your world, gold and silver, precious metals, as you see, things like the BRICS nations rising, and you see the new Silk Road being built as infrastructure, and how the world is sort of taken a step back from us as a global leader, and how China has sort of stepped up. What do you kind of see as the sort of play out of how all of that's moving forward, especially now we're in a Trump administration, like maybe how that looks different?
Yeah, well, it started with Iraq, and you could say the line was crossed with Russia when we sanctioned them and in essence kicked them out of SWIFT and confiscated, or you could say defaulted on $5 billion in U.S. treasuries, handed it over to the Ukraine, largely in the form of weapons, a country they're in the midst of a war against. It's a hard line to come back from, especially when you have absolutely ridiculously horrendous fiscal policy, fiscal irresponsibility, better term, where, we're creating $1 trillion in debt every 100 days. A trillion seconds ago was 31,688 years ago. And when you talk about the Belt Road, the new Silk Road, what's happening there is ridiculous. For people who don't understand what it is, it's the largest infrastructure project in human history. And it's connecting Asia and Africa and South America with roads and bridges and maritime channels and all sorts of trade routes. What China is doing right now exemplifies, I think, where the BRICS are going. Now, try and make this as succinct as possible. The China is calling it internationalizing the yuan, but I believe it to be building the rails for Enbridge, the Chinese digital technology. Well, I should say China, Hong Kong, Thailand, United Arab Emirates, and Saudi Arabia, the fifth partner, which is key to a platform that allows cross-border settlement outside of SWIFT. But what China is doing is internationalizing the yuan, so they say. And I think that's just to not antagonize Trump saying what it is, building the BRICS rails. Because what they're doing right now is, first and foremost, they're allowing the digital yuan to be immediately convertible into gold through the Shanghai Gold Exchange. You don't have to convert to dollars first. You always had to. When gold comes out of China, it has to come out of Hong Kong. So their theory is to use digital rails to trade with one another and settle imbalances in gold. Now, they're going to do that by expanding the Shanghai Metals Exchange, internationalizing it, building a series of multi-jurisdictional vaults related to it. First one was just completed in Hong Kong. So China sells or buys oil from Saudi Arabia, pays for it over either the cross-border SIPs, I forgot the name of it, it's a cross-border payment system. It's like the SWIFT, but it is, I forgot what the acronym stands for. It's SIPs. I haven't talked about it in a long time, but it's a cross-border payment system that is not compatible with SWIFT. They'll trade their digital yuan or over the Enbridge, which is operational right now, as is the unit. They just started using it, which is key. But anyways, they trade with one another. They will buy oil from Saudi Arabia using a digital yuan, which is then immediately convertible into gold on the Shanghai Gold Exchange. But hey, I'll take possession of it in Hong Kong. Guess where the second vault is being built right now? Saudi Arabia. Their intention is then to build them all throughout the Belt Road. So all of these countries in multi-jurisdictional vaults can trade with one another in local currencies, digital local currencies over SIPs or Enbridge, free from SWIFT interference. And if I don't want to hold digital real or digital yuan or whatever the currency is, I can just settle imbalances in gold. And through these multi-jurisdictional vaults, we have the ability to take possession rather than having it in one vault, kind of like the Bank of England, and get into a position where Venezuela says, can we have our gold back? And they say no. So it's a way for trust to be expanded throughout this ecosystem. And it will be based upon a marriage between gold and blockchain technology for everyone to see transparency and redeemability. And it's just the very beginning. And that is what, again, the mainstream here is missing. This is expanding. It is operational. It is actually trading. One last thing, for those who poo-poo this and say, bullshit, pardon my French, but China just signed up the countries in Southeast Asia, which are, the acronym is ASEAN. There's 800 million people there. It's China's largest trading partner by far. They're double the population of the United States, over 30% of global GDP already. So now these countries, who are China's largest trading partner, will not be settling their transactions in dollars, which chips away at the settlement. And if you don't have all those dollars, well, you don't need to put your reserves in treasuries, do you? You can put it into gold, which is the de facto settlement, which has doubled the performance of the treasury, and it cannot be taken from you or sanctioned away from you the way treasuries can if it's in your own possession. These are the things that are happening in real time, and it's startling how the mainstream has missed all of it.
Yeah, I mean, mentioning the fact that's to me the whole thesis of the film Money Disrupted, is the concept that we are moving to an asset-backed economy, an asset-backed system from a debt-based system, and that the blockchain serves a underlying tool as a public ledger. And I'm not picking which ledger, I'm just saying the tokenization of those assets is definitely something that's going to lead us there. I want to play a clip real quick of Larry Fink talking about this, one of the friends out there who used to really hate crypto, and now he's talking about how we're going to have tokenization. And then I'm going to bring Zach in to kind of
real quick. And then
was
one point on what you just said. A debt-based system works if there's a good amount of trust.
Right.
We've squandered the trust, not only geopolitically, militarily, all the things that we're doing, but also monetarily. And you cannot have complete disregard for your fiscal policy in terms of its sanity, and still operate on a trust me debt-based position and go around being the policeman of the world when you're borrowing money through discretional borrowing to fund your military. It just doesn't work.
Right. Yeah, I agree. I agree. And I think we're seeing the end of that system, right? This is the great financial reset, as they say. My wife's been saying that for years. I thought, what kind of conspiracy thing is this? And then I'm realizing what that actually means.
That's woman's intuition, brother. She knew.
She knew way before I knew. And total credit, she was right. And now I understand what that is. So I'm going to play this clip of Larry Fink, and then for viewers online, we're going to have Zach Rector come in. I'm actually at his booth here live in Vancouver, and he's going to conduct the rest of the interview with you, Andy. So I want to play this. Go ahead.
We believe the next step going forward will be the tokenization of financial assets. And that means every stock, every bond will have its own, basically, CUSIP. It'll be on one general ledger. Every investor, you and I, will have our own number, our own identification. We could rid ourselves of all issues around illicit activities about bonds and stocks and digital by having a tokenization. But the most importantly thing, we could customize strategies through tokenization that fits every individual. We would have instantaneous settlement. Think about all the costs of settling bonds and stocks. But if you had a tokenization, everything would be immediate because it's just a line item. And so we believe this is a technological transformation for financial assets. I believe if you want to talk about voting and voting choice and all the things, if we know every moment who is the owner of that stock and it's now time to vote, every individual who has ownership is identified and they can vote their own share.
All right, Andy, how you doing, brother?
Good to see you, my man.
Absolute pleasure to have you with us here in Vancouver again. Huge shout out to Chris for setting up this studio for us.
Yeah.
Get some content. It's always a pleasure to meet with you up here.
You too, bud. It's been a long time, and it's great to see you again. You're looking great.
And last time we spoke, we were at a $30 silver, $2,000 per ounce gold.
Yeah. Isn't that interesting? Things are accelerating, Zach, and accelerating. I think, look, gold and silver have never been allowed to find real price discovery. And we're beginning to see what that looks like. And I think we're a long way away from it. But we are beginning to see what markets look like when they're driven by real fundamentals instead of paper promises and paper leverage that is breaking for one reason: delivery. No one ever stood for delivery, and it's hard. Look, I'll sum it up this way: you can only manipulate a market over an extended period of time by pushing it in the direction it's going. And the world doesn't want paper promises anymore. They want the real thing in their hand and transparency. And that's certainly what gold and silver have to offer. And I think a move away from what was is becoming very transparent and very obvious if you open your eyes.
Yeah. And I still think that we have a long ways to go. Fundamentally, you look at silver, gold, that's why we're here, to learn more about this. And what do you make? Isn't it a little bit funny? I get a kick out of hearing others talk about bringing transparency into markets, right?
Yeah.
And they're leaning into this tokenization effort and everything. What do you think of that?
I think they have no choice. I think it's become very obvious that the old system doesn't work anymore. And, kind of what he's referring to is rehypothecation as an example, where the same asset is sold over and over and over and over and over again. You use the COMEX as an example that you could even maybe use the treasury market. No one has bearer bonds anymore. How the hell do we know that the treasury we own wasn't pledged to 48 other people? And if you're just going to turn your bond in at maturity, well, print the cash to do it. This is the case in commodities on COMEX and the LBMA. We know this. We know, like, for example, in London, there's 2 billion ounces of outstanding spot contracts standing behind 140 million ounces of metal, or 140 million ounces of metal standing behind the 2 billion ounces of silver spot contracts. What could possibly go wrong? The rehypothecation of 15, 16 to 1, and it's probably a lot more than that, works in an environment where no one stands for delivery. But when, just like Bernie Madoff ran a great deal when everyone was making huge monthly checks, until people said, but Bernie, we need our money back, our principal. Then we got a problem. And that's what's happening right now. can't manipulate a market when everyone is standing for delivery. And that is what is different than anything I have ever seen before in my career. 35 years, Mike.
And when we see, gold at 5,000, silver at 100, but you got to look who's a seller of gold and silver. I mean, you have some retail. This is why I was excited to speak with you, because you have those insights, and we appreciate you for helping our community load up on precious metals.
Absolutely.
But we have some retail that is selling. I've heard from some others. But what are you seeing on your end? I mean, central banks aren't selling gold at 5,000.
No, and it's less gold being sold right now, and ironically, you're seeing some people sell silver, and I get it. I mean, it's been a ridiculous run. Profit's not a four-letter word, and there have been a lot of people who've been hanging on for a long time. So there's also a phenomena that I don't know that it's really even selling as much as we're seeing trading silver for gold, playing that ratio. So in general, who's selling? I don't know. I don't know who would be stupid enough to do so in terms of outright selling at the higher level. In terms of retail, I can't blame people for taking a profit. Do I believe that the run is over? Not even close. Not even close. We're talking about, and let's just suspend the great gain that we've seen and suspend technical analysis and just simply say gold and silver have been caged up, going all the way back to the London gold pool, to where they've never been really allowed to find fair value. They've never been allowed to find price discovery because of suppression by Western banks. And the rest of the world, who for most of my lifetime was third world. And now all of a sudden they're not. They're motivated, they're coordinated, they're sophisticated, and they're wealthy as hell, and they know what we're doing. And they're beating us by standing for delivery on the world's commodities, which is the progression from a debt-based promissory system to one of transparency, like blockchain, and commodities married to it. No, I don't want your promises. You're broke, you're insolvent. I want the real thing in my possession or somewhere where I can see the veracity of it, whether it be through tokenization or what, but that's where we're going. And I think the thing is most people, old school people who have made lots of money in the system, in the old system, have a hard time really getting that. But to me, and I think to you, it's very obvious if you open your eyes and break away from the mainstream and start to do due diligence, listening to people like yourself. And all of a sudden you can see, wow, things do change. Nothing stays the same. And this is, I think we are on the precipice of a whole new monetary system, one that is very different from the one that has given us this exorbitant privilege for the past 100 years.
Let's talk about it breaking right now. We're seeing this is driven by the loss of trust.
Yeah.
The Fed, central banks around politics, and in all this chaos, the one thing that is making sense is gold and silver being at all-time highs and still having a long ways to go. But I want to get your thoughts on this. Just the other day, it came in. The New York Fed has checked the exchange rate with the Japanese yen. And a lot of folks have been talking about this carry trade unwinding. And this is part of a bigger global margin that's unwinding right now. But this is the first instance where the Fed is kind of showing their hand that they're going to have to intervene and buy those U.S. treasuries that the Bank of Japan and other countries are going to be offloading. And so can we talk, where are we at as far as the current system breaking?
Yeah.
And timeline of the new system coming.
Well, you talk about the carry trade. It's been the piggy bank for the world for the last 30 years, where you could borrow yen, whether it be Japanese pension funds or U.S. investors or European investors. They can borrow in yen at zero, convert to their own currency or to dollars or to euro or to whatever you want, and buy assets. Treasuries earning 4% for 6 months, like we saw for a few years, and make that spread with no risk. But the problem is the yen started to appreciate against the dollar and their rates started to go higher. It's broken. And now these trades are underwater or do not make sense anymore. And all that money's coming back. I just saw the other day that the Fed is now actually buying not just U.S. treasuries, monetization, Weimar Republic. We're not quite there yet, but they're buying Japanese yen. So so they're trying to strengthen the yen against the dollar. It's currency wars, and it's not a good thing, to be honest with you. It goes to show the desperation. So, yeah, to your point, they are buying. I mean, if we believe that the Cayman Islands is the first or second largest holder, well, Great Britain. So two countries that are both two of the largest debtor nations in the world in history. Let's buy each other's debt. That's a great idea. And then after that, it's the Cayman Islands and Ireland. If you believe that to be true, that the Cayman Islands has that much of our debt, and it's not a shell corporation, maybe with the name Federal Reserve. Yeah, I think those things are very evident. It's breaking, and it's the desperation of an empire that is slipping away, at least in terms of its grasp on the reserve status. But what I'm talking about here today or tomorrow is maybe that's where they want it to go. Do they want to lose the reserve status? And I believe they do. As crazy as that sounds, I believe they do. And I'm going to get into that tomorrow, but these are very difficult times. I'll just leave it to you this way, Zach. Whether or not you buy gold or XRP or whatever you buy, you save in dollars, you're going to go broke. If you're not a contrarian, you're going to be a victim, because the dollars that we hold are acting like a melting ice cube in terms of their purchasing power, in terms of their savings ability. It's just not happening anymore, and it's accelerating.
And here at Vancouver Resource Investment Conference, there's great conversations about macro, the geopolitics, and this commodity war. And people laughed us out of the room for talking about this, right? And now you're seeing we made the move on Venezuela. We're making the move on Greenland. President Trump's willing to put anything on the table. And so it's out here, and yet people still aren't in as equal of a rush to save themselves and get to these assets. And for me, just in our community, when we're seeing them do it, to me, it's very simple. I don't need to guess anymore. I just need to figure out, how do I stack as much of these hard assets as possible as we transition to the new system.
Zach, you are the pimple on the elephant's ass. And I mean that. So am I. So are the people listening to this. That's why there's an entire school of investment theory called Kondratiev and Elliott wave theory, based on the human emotions, the masses, right? The masses and their emotions, from exuberance to panic and fear, drive the market. Those that can step outside, we're very few of us. That's why we're not part of the masses. Everyone here is not part of the masses. They see things far more clearly than the masses do. And part of the reason the masses don't see it, one, is that the media doesn't do anything but foment divisiveness. They don't talk about the things that you and I read and talk about every day. I watch your stuff, and I think you probably see my stuff. And when I watch your stuff, sometimes I say, geez, where'd he get that info? And I know a lot of people say to me all the time, where'd you get that info? Well, it's not on 60 Minutes or the evening news. You have to dig, and you have to separate yourself from this ecosystem. So not only are they not seeing truth in the mainstream and have to work harder to find it, but by the same token, look, I would vote for President Trump again, and I thank God that he's here, compared to where we would be under the previous administration, had they retained. But much of what he says and the good that he does in policy is lost in translation to half of the country who refuse to listen to it, no matter what it is. So when they see these things that are promoting mercantilism instead of globalism, America first, protect us, bring back manufacturing, secure natural resources. You go into Venezuela and secure the oil. We built the infrastructure. Our companies built it. We had an agreement. He took power illegally. Aside from being a narco kingpin, supposedly, you can make an argument that it was rightful to do so. Now, a lot of people wouldn't even listen to that, and it was wrong, and you can't do this stuff. Okay, whatever. My point of it is that we're still, he's, if you take a step back and look at what he's doing, maybe giving our children, our grandchildren a future, I applaud his policy. The problem is it's just lost on too many people. So it's that uphill battle we're still fighting.
Well, and this is what I say to my audience is, I don't care if you like him, love him, are offended by him, or worship him. He's not going to, change your life unless you make the decisions and take the action to invest in these assets, to run your business, and to secure your family's wealth. I want to go back, like you made a great point about how maybe this is what they want, right? the reserve currency status being challenged, given up, transitioning. We're seeing the same thing in this delay in the crypto legislation, where we got the stablecoin legislation passed, but now they're holding up market structure, and the banks are showing their hand. They're coming in, and they don't want to allow us to be able to earn yield on stablecoins for just simply holding it, right? And it shows us that the banks are willing to allow the reserve currency status fall behind, be threatened to secure their own pockets. And so I think it's the same thing that you're talking about. I'm excited to see your presentation. You're going to be speaking tomorrow.
Yeah, I mean, why the hell would you need to put your money in the bank, which, you know, has not proven to be real smart? And with the banking laws, bail-in legislation, and the great taking and all this stuff, when you can earn yield from a third-party stablecoin issuer. But it is part of what I'm thinking about and talking about. In fact, the Genius Act is a big part of it. And the Clarity Act, I think it's called, where they're saying, no, you can't earn yield. Well, what are they doing with that yield? Let's look at a company like Tether. What are they doing? Well, they own 14 billion in gold already. What does that do to the dollar? Devalues it, pushes the price of gold higher. And that's part of what I believe this is all about. I don't know, but I think, unfortunately, I do believe that's an uphill battle. The banks still hold a lot of power. And if you can earn yield on these stable coins, I think it's the end of the banks, period. Or a massive consolidation. So real quick, what is a CBDC versus what is stablecoin money, where it's going to be money as according to the Genius Act, right? Backed by U.S. Treasuries. So the piping all goes through the Treasury. So is this stablecoin a stablecoin or a CBDC in stablecoin clothing? Yeah, probably is. So it's an uphill battle. But I think it sucks. I think we should be able to earn yield on it. And if it does, it will change the monetary system like that.
Yeah, because most of us, like myself, will be holding our gold and silver. We'd be holding our stable coins, and we wouldn't be parking it in the bank, right?
That's the whole point. And you know, so part of me feels like maybe they'll let it, because the whole premise of a CBDC is to consolidate the banks and have it issued through the central bank. Well, if you want to consolidate the banks before you do anything else, let there be yield earned on stable coins, and watch how fast a whole bunch of banks just collapse or consolidate or just give up.
Before we let you go, Andy, gold at 5,000, silver at 100, and to me it feels like we're maybe going to take a break, but this thing's still rolling. So can we get you to give us I mean, how far can this thing go just in 2026?
Well, short-term caution in a market that's moved up like this is always prudent. Can coexist with long-term bullishness. They're not mutually exclusive of one another. A lot higher. Zach, honest to God, man, I'm not just saying this to talk the book. I'm not. These assets have never been allowed to find price discovery. Never. And whether it be the London gold pool or the military industrial complex stepping on silver because you need so much for high-tech weaponry. And in fact, it was here 3-4 years ago, I gave that first speech about the amount of silver in a cruise missile, and was approached by a client of mine who became a client who was a consultant for the DOD. He said, I'll be damned, after research, you're right. There's an awful lot of silver in this stuff. Anyways, the bottom line is, whether it be the DOD holding down or the military industrial complex holding down silver, whether it be the London gold pool or the Western central banks suppressing gold to maintain strength in bond market and in currency, because if you maintain low interest rates, gold will go to the moon. That's Gibson's paradox. You got to step on gold. These things have never been allowed to really find price discovery. And I think we have a long way to go in that. And but yeah, nothing goes straight up without a breather. But when you look at what they used to do, Zach, in 1980, silver went to the moon because two brothers cornered the market and realized, like there is right now, more paper than bars behind it. Rehypothecation. Buy all the paper, stand for delivery. The exchange changed the rules, screwed them, they had to sell. 2011, it was about leverage and speculation. What'd they do? They raised the margin rates several times. Right now, you have to have roughly $40,000 in your margin account, maybe a little more, to own one 5,000 ounce silver contract. On Christmas Day, it was 21,000. The day after, it was 27,000. They keep raising margins. So what does that do? If you and I are investors on COMEX and we got $20 million in our margin account, we're ready to go. We got a lot of money, but they keep jacking up, and you got a bunch of contracts. At some point, you're like, I can't keep putting more money into my margin account. I can't keep getting margin called. I'm out. You got to cover a bunch of those contracts. It sells. You have to sell, and the price falls, and selling begets selling. Everyone gets margin called, right? That used to kill the market. That's what it did in 11. But what happens now? The big money who is standing for delivery, like in silver, the largest December delivery month in the history of the COMEX this last month, December, like 65, 6, 7, 8 million ounces, the exact number, but the largest ever. Well, they come in and they say, because this was the day after Christmas that they raised margins again for the second time in 2 weeks. Thank you very much. And we'll just take it and stand for delivery. And it goes down as all the levered weak hands fall out of the trees. But the big money, the central banks, the sovereign wealth funds, the Sonys, the Samsung, the Tesla, they say, thank you. And they take it, and they're not using margin. And the price goes right back up. This is very different, very different. And you can say, just like the new monetary system we maybe are fast approaching, that's why it's different. And these assets are worth far more than the paper currencies used to buy them. And the people who are standing for delivery at massive volumes, they don't use margin. They don't care about rate hikes. They don't care about higher lease rates. They don't care about any of it. It's just get it at any cost. With sovereign nation central bank money, they do not care, nor do these massive corporations and people who get what's happening.
And we have national reserves now being talked about as well.
I saw that. Yep. That's well, not only first they say silver after every month since last November, 15 months ago, 16 months ago, record after record after record after record every month. No one talks about it. I'm screaming, what the hell? How do you guys not see this? Who's not asking? If a mint box of Silver Eagles is 500 pounds, Zach, who the hell took possession of 68 million ounces? But that's every month. 40 to 60 million ounces every month keeps coming off of COMEX, and no one says a damn word. I don't understand how people don't see this. And I think that tells you all you need to know where this is going. It's that every month the biggest money in the world doesn't care about price. They're standing for delivery. And I think that tells you where this is ultimately going.
Yeah. Well, guys, before we let Andy go, I just want everybody to know, if you are looking for gold or silver, we have partnered up with Andy, one of the best in the business. And you guys go reach out to Andy and his team. Let them know I sent you, and they will take very good care of you. And I just, once again, thank you on behalf of my community you've been hooking up our community for the past 3 years, picking up gold and silver, and obviously it's done tremendously well.
I appreciate that. And the best way to do that is info@Miles Franklin. Send us an email, say that you're coming from Zach. Info@Miles Franklin. We'll send you our price list. We won't be undersold. And any questions that you have, let us know. We're honored to be associated with a young guy like you who's saw it way early before everyone else your age. I'm telling you, man, and it inspires me to see younger guys picking up the torch and seeing what's really happening. So thanks for letting me be a small part of that.
Awesome. Thank you again for joining us, Andy. And I hope you have a great weekend in Vancouver.
You too, brother.
All right. Take care, man.
You too. You guys rock.
Hello. Hey, everybody. I'm going to put you on a commercial break. We'll be right back.
You will find the heart of America here. The decline of American manufacturing jobs is a serious concern, as many companies choose to move their operations overseas.
How did this dramatic income inequality happen on such a wide scale?
I have directed Secretary Connally to suspend temporarily the convertibility of the dollar into gold or other reserve assets.
The U.S. came off the gold standard August 15th, 1971, when Nixon closed the gold window. Since then, we've had floating exchange rates with the rest of the world.
The majority of Americans don't make enough money to cover some of the basic costs of living.
Every day is a struggle for me, but I still have to worry about where my next meal is coming from.
Even eggs has gone up to $5 or $6 per dozen.
It all began in November of 1910. The Federal Reserve System was conceived. But all these years, we've had something which most people have thought was a government operation of some kind or another.
It's not. What is it? It's a cartel.
There's been massive money creation in the U.S. When they create a lot of money, that devalues our buying power. And this has gone on to such an extent that 40% of all the money that's in existence in the U.S. dollar was now created since the pandemic.
Here you go, guys. Let's play central bank, because it's even easier than what I'm showing you. Originally, when we were on a gold standard, gold and silver were actually the money.
The only way we get out of the rat race of inflation and endless money printing and debt slavery is to return to sound money principles.
Bitcoin's now 16 years old. It's never been hacked. It's an extraordinary invention.
This is just the beginning. A new era of financial freedom where individuals can control their own money.
As you know, I was a skeptic.
Yes!
I believe Bitcoin is legitimate.
I'm a believer in stablecoin, a believer in blockchain.
I think crypto trading is going to become the infrastructure layer behind real-world assets.
We have to go back to sound money. We have to get our balance sheet in order. We have to stop irresponsibly spending money.
There's so many innovative technologies coming in, cryptocurrency, AI technology. What you should be doing is studying how to become an investor in those types of markets and those assets.
When I was in Zimbabwe, it collapsed, and these young kids come up with their AK-47s, and it's about taking your money. So when this collapsed, law and order collapsed. It's coming to America.
The rising cost of food is driving an affordability crisis.
Crime on the rise.
The rise in crime.
We have a pandemic of lawlessness.
And the Fed.
And the Fed. We want to end the Fed.
And the Fed, let's go.
End the Fed. End the Fed. End the Fed.
All right, I'm back in the driver's seat here. Zach is super tall, so we have to adjust for him because, look at that. Oh my God. Okay, Zach, can you tap my face over there? This is all live production, guys. We're live here in Vancouver. There we go. Yay. It's like the optometrist, number one, number two. I wasn't watching the stream, so I don't know. So how was the last part of your conversation with Andy?
I love talking with Andy. He's so dialed in on the macro. And he's also, one of the few people in this room in particular that is leaning into the tokenization, understanding blockchain technology, how it plays into the new financial system. And so that's what I love about this conference is for a crypto background person to be here and bridge the gap between this commodity space, the crypto space. That's what we're here to do. And Andy's on the forefront of that.
Yeah. Speaking on that topic, one of the ideas I had towards the back of the film was basically to look at, can we take all of the natural reserves within the United States? Can we take every asset we have, oil, gold, silver, that we know of, because it hasn't been audited since 1954 or 3 or whatever. Somebody in the chat could tell us when. And tokenize those on the blockchain. Basically take those assets and use that as a way for us to move back to an asset-backed treasury away from our debt-based, Federal Reserve quantitative easing. Now, at the same time, we're seeing the Federal Reserve is starting quantitative easing again. So they are, which is a fancy word for, we are buying our own bonds, basically.
Right.
So talk to me about what you see as kind of being the catalyst is moving forward on the gold and silver market and maybe how that might bleed into the crypto market.
Well, as we were talking about last night, nobody trusts anybody, right? I mean, this is not just in the crypto space where we say trust but verify. Just society as a whole is now losing faith in all institutions, whether it be political, central banks, our money. And so this is why gold and silver have run so hard and they still have a ways to go. And the cracks are starting to show. I asked Andy what he thought about what just came out a couple of days ago. The New York Fed did an exchange rate check, a formal exchange rate check with the Japanese yen. And that is the precursor to them coming in and buying U.S. bonds and treasuries that the Bank of Japan and other institutions are going to be selling off, right? This is this whole carry trade unwinding, which is part of a global margin call. And we are already seeing what they're going to do. They're going to intervene. They have to intervene. Is it going to be a big panic, small panic? It's all the same thing. And if you don't own these assets, you are going to get left behind. So just like folks are now, I thought gold was expensive at 2,000 per ounce. I thought silver was expensive at 30. And here we are at $100 for silver and 5,000 for gold, and no signs of even taking a break, really.
Yeah. And when we first sat down in this stream with Andy, he said, oh, only, I think that the amount of value sitting in gold and silver and precious metals was like 2%. And actually, I hear that number sometimes in the Bitcoin community too, where they look at the total addressable market of how many assets are going to flow in to these precious commodities, whether it be silver, gold, or whatever it happens to be. And so that tells you that there's an opportunity area. There's another thing with this reverse carry trade, which is the idea that we have a very inflated stock market right now, right? And the stock market in the United States is got a very high P&E index, something like 1 to 39 something like 1 to 31, meaning 31 times the value of their actual earnings. And so when I had interviewed Andy and also a gentleman by the name of Lawrence Lepard, he had said, when stocks are over 25 times their P&E index, you are in sort of a fear cycle, right? You're kind of entering, oh my God, these stocks are worth way too much according to the revenues.
Yep.
So what's your read on, is this price we're seeing in gold and silver hitting all-time highs, is that in some kind of anticipation of a global market meltdown or some other kind of thing, a race to safety, a place where they can store their assets while the stock market may or may not survive over this next year?
Yeah, I think that goes back to the loss of trust. We lost our signal on this screen.
Okay.
But it's all back to the loss of trust. I mean, people don't trust these valuations in the stock market. And I think that you're going to see a rotation. I've seen in my comments the last few days that some people are starting to rotate from silver into XRP, from gold into XRP. And I think that you're going to see a rotation from the stock market back into crypto. But first, you'll see a move from the stock market back to treasuries, a flight to safety, right? Where people will be scared to go into crypto. They'll be scared to hold stocks. So they're going to go into treasuries. And I believe that the Fed, the Treasury, Scott Bessent and President Trump are willing to sacrifice the stock market to save the bond market. They want to bring rates down to open up the liquidity cycle, the business cycle, to make Main Street thrive again, right? They talked about how Wall Street has had a party. It's time for Main Street to join the party. And to do that, you got to bring interest rates down. And to do so, I think that they're willing to sacrifice the stock market. So I think that you're going to see a big rotation, profit taking, and people that are scared to be still in the stock market while it is at historically way overvalued levels. And so I think in the meantime, I am in crypto. I'm in precious metals like silver. And for me, we're kind of getting in front of that rotation. Now, I wanted to step in here, Chris, because the market's back down today as we record this update. XRP's down to $1.81, I think is what I just saw.
Oh,
so
that hurts, bro. It hurts.
Do we have a buzzer?
Or womp womp. Let's see. We're gonna use some sound effects. I think. Oh no, that's not the sound. That's
bring it back.
That's no, that's not the sound. Hold on, let me.
That's the wrong.
No, but that is how I feel about the market right now. I'm learning my sound pad.
That's the one.
That's how I feel about crypto right now.
That's the one. So we have Bitcoin at 86.6, back below 90,000, and all the way down to 86,000 here this morning. 2,800 for ETH, and XRP went back down to $1.81.
Don't tell me that, Zach. I don't want to know.
It's at $1.82 right now, so don't look. But this is something that I've been warning my community about, is looking at what's going to bring, where the catalysts that are going to bring this market back down. And it's this government shutdown right now. with the scene that took place in Minneapolis. We don't need to get into it, but now the government shutdown's back on. And the odds yesterday of a government shutdown were at about 9% on Polymarket. And after this incident that took place in Minneapolis, and Chuck Schumer's now coming out and saying we're not going to fund some of these agencies, the odds have spiked.
Right.
And the only market that can react to it over the weekend is crypto. So it's the same thing last weekend when President Trump said we're going to tariff all these countries in the EU over the Greenland matter. The only game in town, only market opens crypto. So crypto got beat up last weekend. It's getting beat up again here today. And that government shutdown here, I believe this is presenting a long-term buying opportunity. But the thing that we've been talking about in my private community is being invested in the digital asset space. You have to be able to stomach 25 to 50% drawdowns, even from the levels that, we were just at, right? Because this isn't just risk on, this is very risk on asset class, right? In cryptocurrency, digital assets. So just like I said, people are going to get scared and leave the stock market to go to treasuries. Same thing. People are going to have to sell off their crypto here to go back into cash, unwinding those trades. And so market's back down here today for cryptocurrency. And, we have a Delay in Clarity Act as well, too. So, I think that as far as it pertains to the digital asset space, we have some bumps here to get over, right? And until we do so, we have to be able to stomach this volatility, knowing that the fundamentals are lined up. And to tie this back into why we're here and what we can learn, look at silver trading under $30 per ounce for 12 years before 2011. And then even before that, for decades before that, it was trading under $20 per ounce.
Right.
And these guys have all been finally vindicated with $100 silver. And they went through that for 12 years. And here we are in crypto, and guys get a bag of crypto and can't hold it for 2 months.
Well, yeah. I'm not a millionaire yet. Why?
Yeah.
Zach, why am I not? You guaranteed the price.
This is a different game, and everybody wants the 5 and 10 baggers in digital assets. It will come, but you also have to be ready to write it down 25 to 50% right now while all of this chaos is going around. And this is exactly why we have gold and silver, because our gold and silver are pumping right now.
Right.
So,
yeah. Well, I had remembered that we were talking last night over dinner about how the poly market was getting very negative about the government funding actually coming through. And so obviously the only open market is crypto and crypto ends up taking a beating whenever that happens. Unfortunately, that's just how we are, being a 24/7 marketplace.
All right. Robert is here, Chris.
Robert is here. Fantastic. So we were waiting for Robert Kiyosaki, so we can bring him in when he's ready. 5 minutes. 5 minutes. We're going to bring Robert Kiyosaki in. So we can bring him in here. So super excited about having Robert live on the stream. They got him on over here. And what I want to do now, Zach, is I'm going to play a little clip of you. And guys, this is all live. We're live here in Vancouver right now. We've got a great audience around us. Robert Kiyosaki's literally right over there.
The mob is around us.
The mob is around us. His security team has arrived. So it's getting very tense around here. So we're excited to have him on the show. We will show a little clip of you, Zach, from the documentary Money Disrupted. Zach shows up, much later in the documentary as we're talking about derivatives. We're talking about how the marketplace is going to be tokenized and really the great financial reset, how we transformed from our traditional finance system and where we're going to tomorrow. So here's a clip of Zach that he has not seen, maybe. I don't know.
I've always been saying here that Ripple is perfectly slated to partner up with our Treasury to help them expand U.S. dollar dominance. And actually, if you pull the quote from President Trump at the Bitcoin conference in 2024, he went there and said that stablecoins were going to be key to expanding U.S. dollar dominance.
As part of our effort to provide regulatory clarity, we will create a framework to enable the safe and responsible expansion of stable coins, allowing us to extend the dominance of the U.S. dollar to new frontiers all around the world.
So in my opinion, this administration knew that stablecoins were going to be the only way to soak up the lack of demand for treasuries. As everyone gets away from the dollar and wants to dump the treasuries, this process is accelerating right now. We need to soak up that demand somewhere. Stablecoins are the answer.
I'm glad Zach agrees with his own analysis from his own interview. He's like, I agree with this. I did
That
this.
guy's smart.
I like that guy. Zach was just telling me earlier, just like, it's just unfortunate we couldn't have a more handsome host. Anyways, it's really cool that that they were talking about that. So yeah, go ahead.
And that was recorded in September.
Yeah,
right?
of last year.
And look at what's happened since.
Yeah.
Right. And so we got the Genius Act passed, and I was just talking about those with Andy. It's like they're willing to hold up us maintaining the reserve currency status in this Clarity Act. The banks are now trying to come in and stop the whole yield thing, and they're showing their hand, right? And we needed Genius Act passed to be able to soak up the treasuries, and we should encourage free market capitalism in America. Was once a popular idea. We should bring it back and allow people to hold stablecoins and earn yield if we want to maintain the reserve currency status. This all bolsters U.S. dollar support, but the banks are so greedy, so worried about their own pockets that they're willing to sacrifice our reserve currency status to make sure that their pockets stay lined.
Yeah, exactly. I mean, I was always amazed that the Genius Act actually got passed at all, but I understand it when you look at the idea that the Genius Act is really the way to absorb the Treasury demand, and it makes sense because we have to create, without adding new tax, a way for those treasuries to be more valuable, right? I feel like it classically is always, let's pass more tax and put more revenue in the treasury. But yet when you look around, for those of us in the States, it doesn't feel like I'm not really getting a whole lot for this federal government. I mean, I'm not trying to be like super negative, but like, I have my End the Fed shirt on, guys, like, because I don't think the Federal Reserve and therefore the ability to infinitely print money within the United States is really a thing that is helping us as a country. And as you see recently with the fraud, waste, and abuse in Minneapolis, and you can only imagine how much is happening in California and across the entire nation, both in the domestic programs and also in military programs, you just kind of start to get the feeling that this money isn't really going towards things that are useful for society. So anyways, it's a long way to say that things like the External Revenue Department, the tariffs, moving us to a place to create demand for those treasury bonds outside of just, hey, let's tax everybody into oblivion,
right,
so that money can go in a black hole. We have to have both a reduction in federal government size and programs in waste, fraud, and abuse, and we have to have responsible monetary policy, which comes together to make the treasury bonds actually be worth something, right? To actually audit the gold and hold everything there. So anyways, I'm excited to see how that stuff plays out, because I do feel like Trump understands that we need to move back to a gold standard or some kind of asset-backed standard, whether that's the tokenization of our national reserves or that's some kind of combination of things, crypto asset bag plus gold. So anyways, we're excited to see how that goes.
Yeah.
We have Robert Kiyosaki on standby over here. Guys, I'm going to check in on him. Zach, do you want to talk about anything while I check in? Would you like me to play a commercial break?
Yeah, I'll talk here a little bit more about markets while you check on Robert. That sounds good. Appreciate everybody for tuning in here as we're live from Vancouver. And once again, sad to see our crypto markets back down today. But like we were talking there with Chris, this is a long-term fundamental buying opportunity on these digital assets like XRP and others. Just like the lessons that we've learned from our silver community here, they are finally getting rewarded. And I believe that our crypto space as well will be rewarded for, buying the lows that come in on the market here this time around. And so this is why we're here in Vancouver, is the bridge that we want to build between the digital asset space and this commodity space. This room is full of real businesses, real value, getting the commodities that we actually need to run the world, getting them out of the ground, producing them, and helping society actually move forward. And I was talking with Chris last night. It's hilarious to me that we have meme coins that run to the market caps of some of the companies in this building here with us. And it's so unbelievable to see that we can take these crap coins to some of the valuations here of real good companies. But one of the things that I'm excited about here is finding opportunities in the mining space. I still think that these companies still have a long ways to go even if gold and silver trade sideways or even pull back, still tremendous upside on both those assets and the miners that are getting that out of the ground. So looking forward to, we're going to be speaking with more CEOs. We've got Ross Beatty tomorrow, absolute legend in the space. Robert Kiyosaki is about to be joined here with Chris, and they're going to discuss where we're at here with gold and silver at historical all-time highs. And so we just want to thank everybody for hopping in on the stream here. If you guys haven't already, please make sure that you are liking the stream, share it out far and wide. We're going to keep this stream cooking. And we got Robert coming in. We appreciate everybody for tuning in here today.
Hey, Robert Kiyosaki's here, guys. I'm excited. We're going to go ahead and play a commercial break while we get him in here.
Okay. Commercial break, and we'll be joined with Robert here shortly.
You will find the heart of America here. The decline of American manufacturing jobs is a serious concern, as many companies choose to move their operations overseas.
How did this dramatic income inequality happen on such a wide scale?
I have directed Secretary Connally to suspend temporarily the convertibility of the dollar into gold or other reserve assets.
The U.S. came off the gold standard August 15th, 1971, when Nixon closed the gold window. Since then, we've had floating exchange rates with the rest of the world.
The majority of Americans don't make enough money to cover some of the basic costs of living.
Every day is a struggle for me. I still have to worry about where my next meal is coming from.
Even eggs has gone up to $5 or $6 per dozen.
It all began in November of 1910. The Federal Reserve System was conceived. But all these years, we've had something which most people have thought was a government operation of some kind or another.
It's not. What is it? It's a cartel.
There's been massive money creation in the U.S. When they create a lot of money, that devalues our buying power. And this has gone on to such an extent that 40% of all the money that's in existence in the U.S. dollar was now created since the pandemic.
Here you go, guys. Let's play central bank, because it's even easier than what I'm showing you. Originally, when we were on a gold standard, gold and silver were actually the money.
The only way we get out of the rat race of inflation and endless money printing and debt slavery is to return to sound money principles.
Bitcoin's now 16 years old. It's never been hacked. It's an extraordinary invention.
This is just the beginning. A new era of financial freedom where individuals can control their own money.
As you know, I was a skeptic.
Yes!
I believe Bitcoin is legitimate.
I'm a believer in stablecoin, a believer in blockchain.
I think crypto trading is going to become the infrastructure layer behind real world assets.
We have to go back to sound money. We have to get our balance sheet in order. We have to stop irresponsibly spending money.
There's so many innovative technologies coming in, cryptocurrency, AI technology.
Okay, I'm going to pull us out there. Robert, can you hear me okay?
Loud and clear.
Awesome. Well, thank you, Robert, for being here. I appreciate that. We had a chance to talk to you a little bit last year. Can you believe what's going on with silver and gold right now?
I can believe it, but it's about time, really, for the answer is. It's about time.
And are you excited to see kind of like how the market's sort of been moving into the gold and silver space? Do you see maybe a market collapse happening, or do you think like the stock market's going to move into gold, or how do you feel about all that?
Well, I listen to wiser men and women, I was listening to Ray Dalio. He's a smart boy. And he says, historically, when gold and silver move up in tandem, so sometimes gold's up, silver's down. But when gold and silver move up in tandem, Ray Dalio says what comes next is the money collapses. So if he's correct, I hope he's wrong, but if he's correct, as gold and silver goes up, the U.S. dollar is going to crash. And if that happens, I hope it doesn't, there'll be hyperinflation. The rich will get richer, the poor middle class will get poorer. And that's what happens when we have no financial education or school systems, because I think the biggest criminal organizations, I always point to this year, the Communist Manifesto. And this here is the Zimbabwe dollar.
Yeah.
And then there's this book here. I recommend people read it. It's Philip Haslam's book, When Money Destroys Nations. But this is about the collapse of Zimbabwe, which is this year. So when this collapsed, ironically, I'm in the wrong place at the wrong time. I was in Zimbabwe when it collapsed. And I fought in Vietnam twice as a Marine pilot in Vietnam. But when it crashed in Zimbabwe, the currency went bad and people panicked. I'm afraid that's going to happen in the Western countries. So if it happened in Zimbabwe, what happened when I was there, they call them the war vets, these black kids. They were carrying AK-47s. I'm a hunter, a politically incorrect hunter. I carry a double rifle, 250 caliber bullets in it. These guys come up with AK-47s, full automatics. All I could do is go like this. I put my hands up and I said, what do you want? They took everything. They also took the ranch, the farm I was hunting. And to this day, I remember, I had my hands up. These black guys are going to shoot me. I thought I was back in Vietnam, you know. But at least in Vietnam, I had a machine gun also.
That's right. Yeah, your own firepower.
Yeah, I could take a couple with me.
Yeah.
But this little woman comes out, little white woman comes running out. And the black guys drive off. And she looks at me and she looks at my professional hunter. She says, burn this place down. Leave those bastards nothing.
All right.
So they were taking the land. And so my professional hunter and I, his name was Cohen, C-O-N, we got torches and we walked. The first place we went to was a diesel yard. We torched the diesel yard, that went in a ball of flames. We torched her ranch house and we torched all of her bungalows as grass. We used a lot of grass thatch to cover the houses. I thought I was back in Vietnam again, you know. This was in 2020.
Right.
So that's what happens when money destroys nations. And that's what happens when you have communists. The central bank, the Fed is communist.
Yeah.
Central bank. And that's what happens when you print money. So we're there today.
Yeah.
We're here today.
Yeah.
That's what's happened.
Yeah. I'm probably wearing and the Fed shirt.
Yes.
You know, trying to bring that down. Let me show a clip of you, Robert, from the documentary that's coming out on February 19th.
Thank you for that documentary, man.
Yeah, I'm trying to tell the story of how our monetary system went wrong and how we're in the Great Reset. So here's a little bit of Robert talking about his time in Vietnam. Actually, it's relevant because we're talking about it right now.
As a student midshipman, I went to visit shipping operations in Vietnam as part of the academy study. So I resigned from Standard Oil, $120K a year, to make $200 a month as a Marine lieutenant, and I flew the helicopter gunship in Vietnam. It was one of the best decisions I ever made in my whole life.
Okay, roll in that little creek there. We're taking fire out of there.
The first thing we had to do every single day as a gunship pilot, we had to practice crashing 3 times a day. Every day. Kill your engine, go down. Kill your engine, go down. This was the difference. When you kill your engine, most pilots pull back. Those are the pilots that died.
So there's a little clip from the documentary. It goes on for a while, you telling us the story. I'm going to show another clip in a second where, you know, that story is really powerful of you in Vietnam and everything that's going on. But I'm going to show this other clip of you. You bring the story full circle because I think it helps people understand the psychology of how you understood markets, like basically how you were able to use some of the lessons you had in Vietnam to actually find your way through the marketplace. So I'm going to show this clip back to black. These are from different parts of the documentary, but Robert brings it full circle here with this other part of the story. So here we go, talking about the great financial collapse now, when 2008, when we had the whole implosion.
2008, when the market crashed, people lost everything. I made millions. Because you can make more money in a crash faster than going up. So what happens, against the story I told about flying an aircraft, when it started to crash, everybody panics. But when it crashed, I just I went to the bank, this is 2008. I borrowed $30 million. And the banker said, what are you going to do with it? I said, I'm going to buy assets, because people were dumping their houses left and right.
So it's amazing to me, telling me about the Vietnam story. And actually, as 30 minutes later in the interview, you say, and just like I learned there with the helicopter, I pushed forward. And I just, as a storyteller, I was like, oh my gosh, what a lesson. So just talk to me a little bit about, like, you've seen so many market cycles in your time, so many patterns from, the inflation in the 70s into what we have in the 2008 financial collapse into today. What do you really see as what's happening today? Is there similar to those other cycles, or is there something different going on right now?
Well, history proves humans don't learn from history.
Yeah, right.
And like we're talking about, the Communist Manifesto, the Fed is communist.
Right.
It's a central bank. And I think it was that, I forget the name of the guy, Jefferson, one of those guys said, if central banks take over America, our children wake up homeless in the land that their fathers fought for. This was, I think it was Jefferson, one of those guys.
That's a powerful quote. I'll go find it. Yeah.
Yeah, you remember that one?
Yeah.
And today, homelessness is spreading.
Mm-hmm.
So history proves with all of history.
Yeah.
And like I said, when both gold and silver move up in tandem, what that means is smart money is now moving into gold and silver. They're getting out of dollars and yen and all those pesos and euros. They're going to hard assets, gold and silver. And that's what that's why it's going up in tandem. But what that means is the smart money is getting rid of fake money. They're getting rid of this Zimbabwe crap. But the average person, those stupid SOBs, they teach their kids, well, you better save this. The economy's getting really bad, so save more dollars or save more Zim dollars. And what the Fed is going to do is print more dollars. So again, what's going to happen is hyperinflation. Like I make a lot of money, but I'm in shock when I go to the supermarket today. Because what happens when you print money, as we all know, the price of gold and silver, real estate, oil, food goes up. But for the middle class, that means inflation. They go to the store and chicken and eggs cost more money. And, I still remember sitting, I was in South Carolina, a woman, soccer mom, pulls up in a big SUV, and she's sitting there nearly crying, pumping gas. The price of gas had gone up so high. And again, going back to this book here, the Communist Manifesto, that won't happen in the United States. Well, we have a frickin' communist as mayor of New York City today. And you look at what this guy, Gavin Newsom, the governor of
I like that. Newsom,
the governor of California.
Right.
He just put a wealth tax on.
Yep.
And all the rich, the guys like the Uber guys, the
Facebook guy.
Facebook guys, yeah. They're leaving California in droves today.
Yeah.
This is 2026.
Yeah.
They're leaving California because nobody ever read this book here, the Communist Manifesto.
Right. Yeah. One of the things I had heard about from some local folks I had talked to, I don't know if you know Elaine Colati, but I had spoken with her recently. She's a billionaire real estate developer in Los Angeles. And she had told me, the challenge of this billionaire tax is it's a non-transactional tax. In other words, like you are holding these assets, supposed to be assets, and apartment buildings or whatever, and they are probing into your assets and then proactively taxing you on things that you're not transacting on. Right. So it's insane that that's happening.
Yeah, because generally you don't get taxed until you buy or sell something.
That's right. Yeah.
So if you have a Gauguin hanging on your wall,
yeah,
they're going to tax that.
Yes, exactly. Yeah, anything under the matrix, tax, right? And so that's sort of an invasion of our privacy.
My God.
And it kind of reminds me how in the beginning of the documentary, I talk about the formation of the Federal Reserve and how the promise to the average person was there's not going to be any income tax. That's for rich people only, right? Yeah. And now who pays the lion's share of the income tax? It's normal, everyday people. The billionaires and the millionaires, multimillionaires, they know how to play the tax structure because they borrow against their assets, right? and then that borrowing doesn't count as income. But then if they start down this path, I see it as a repeat. See, this is my problem is the Democratic Party and others will be like, oh, tax the rich, tax the rich, tax the rich. That's the problem. It always starts, that's the narrative, and then it becomes tax everybody. I feel like that's the history repeating itself.
We're the most divided. We had a civil war. What an oxymoron, huh? A civil war.
Right.
But anyway, we're in a civil war today between the left and right. And I really cannot believe the lefties make no sense. They absolutely make no sense. What is wrong with these people? So that's why, like CNN is going down because it's so hard left. People stop listening to it, and which is a good thing, but it's also a bad thing. We have such a division in our country today. And I meet people who live in Santa Fe, New Mexico. I have a bunch of friends there. I live in Santa Fe. I go, means you're a communist.
I know that word, it feels harsh, but then you're absolutely right. When you educate yourself on what the Communist Manifesto actually is, you start to see these things. And I think that's my worry, Robert, is that as income inequality gets greater because the Fed keeps printing, people and young people will say, I feel disenfranchised from the system.
Yeah.
Now that I expect the next Mondami to come along and support me, provide me with universal basic income and all that. So in all of your wisdom and all of the market cycles that you've seen, how do you think this is going to play out in terms of us moving towards, are we going to move towards UBI, or are we going to move towards more of an asset-backed economy and get away from all this debt? Where do you think we're going?
Well, question is, what are you going to do? People talk about ending the Fed or what's the Fed doing and all this. I don't give a crap what the Fed does. What are you going to do? So I own Bitcoin. I'm an old guy, but I did pretty good with Bitcoin.
All right. I'm glad you did.
And I own gold and silver. I own gold mines and silver mines. So when I was in 1965, I was 18 years old. Bought my silver, not even buy it, but I just kept my silver coins.
Right.
Because there was copper coins coming out at the same time. And I started stacking those green boxes of U.S. silver dollars.
Uh-huh.
Today, each one of those silver dollars is $105.
Yeah.
I paid $5 for it.
Yeah.
So does that mean the silver went up $100?
No.
Or the purchasing power of the dollar come down 100?
Yeah.
Do you know what I mean?
Yeah.
And the average person is still saving fake money.
Right.
That's how stupid people are.
Yep.
Especially the Japanese. I'm Japanese. I can criticize. I'm fourth generation Japanese American.
Right.
They save money.
Yeah.
And then they just stopped the carry trade.
Yep.
They were lending out yen at zero.
That's right. Yep.
And so the guys like me would walk in and borrow at zero and buy treasuries at 4%.
Yeah.
So I'm making the spread of 4%.
It's arbitrage, basically.
Yeah, exactly. And you know what happened in Japan? 1990, they collapsed. They never recovered. That's 29 years, 27 years. So the Japanese are savers and the Chinese are investors. My rich dad was Japanese. My rich dad was Chinese and my poor dad was Japanese. I sit there and I make fun of these races. I'm a racist, But when you look at how race fits in, and they used to say, the Chinese were the Jews of the Orient. I think that's a compliment.
Right.
I'd rather be Chinese than Japanese.
Right. Yeah. So when we talk about these things, that reverse carry trade comes up a lot.
Yeah.
Right. And I think, again, to reiterate for people who don't understand that, the Japanese had cheap credit available for a long time. And a lot of people borrowed against that to buy the treasuries, as you mentioned. Now we have what's called the reverse carry trade, right? The Japanese government's raising their interest rates.
Yeah.
What impact does that have as the Japanese raise their interest rates and actually make it more expensive to borrow? Does that have any impact to you as a borrower who's buying treasury bonds?
Right now, I really don't know. I have a wait and see attitude.
Yeah.
The same as when Bitcoin came out, I waited. I saw it go from nothing to 20,000. It retraced back down to 3, and I bought it at 6. So I'm watching the momentum, the trade, and all this stuff. So it's a matter of just being smarter and not taking any snap answers.
Right.
So Japan, was one more thing that Dalio said, which I think is crucial. There's 3 cycles of money. Number one is a short-term debt. Long-term is 75 to 100. And the third term is when another major power takes over. It's China. So sports fans, let me say something. The Chinese are not the most honest people in the world. I mean, they're tough. I started a gold mine here in Canada. I bought a gold mine in Dalian, China. We took it public on the Toronto Stock Exchange. We struck gold. And as soon as we had gold, I raised 27 million. We took that gold mine public. We struck gold, and the Chinese said, "Oh, thank you very much." And I learned the hard way, country risk. Don't do business with people who don't obey the law. I don't care where you are. I don't do business with my classmates because they're drug dealers. I grew up in Hawaii where, marijuana was there. They called it, my classmates
Maui
called
Wowie? Or
yeah, no, my classmates called themselves, we're in tropical agriculture. I said, yeah,
Okay.
you're in drugs, you asshole. Yeah, give me a break.
Okay.
I don't do business with crooks.
Yeah.
I don't care what country they're in, what nationality and all this. Obey the law. Life is too short not to obey the law. The same as taxes. If you've got to pay taxes, pay them. Don't try and cheat the government. Life's too short to live that way. So if anything I can leave is, tell the truth, obey the law, know the laws. You get caught, admit, like I was a Marine, so that movie with Jack Nicholson said, A Few Good Men, you can't handle the truth. I was one of those guys. I got caught years ago. And I walked in, I was a pilot flying out of Hawaii, Marine pilot. I got caught for flying women drunk.
That's crazy. What a story, man. That is crazy.
I do
That
it
is
again.
wild. I'm sure you had.
I had such a good time,
Yeah.
And so when this Captain Abrams, a nice Jewish attorney, Marine attorney,
Yeah.
he tracked me down like a son of a bitch that he was. And finally I walked in, I said, "Hey, Captain Abrams, I can't lie anymore, I'm coming in." So I walked into Captain Abrams. He deposed me. We swear to tell the truth, the whole truth, the truth. I told him everything. I told him everything. I lost like 30 pounds because all that stress of lying and drinking and chasing women and flying illegally and all this stuff, And it was a 3-hour deposition. I looked up at Captain Abrams. I was 28 years old. And I said, "Captain Abrams, how many years will I be in jail?" And he looked at me and says, "Lieutenant, thank you for telling the truth. You're free." Honorable discharge. And that's a long way of saying this February 12th, I'm being honored as a Grand Marshal of all veterans today.
Wow, really?
And that's the power of telling the truth. We'll fuck up. Just don't lie about it,
That's right.
So I'm going to fly to Mar-a-Lago on February 12th. I'm being honored there. In November, I'll be the Grand Marshal in the parade for veterans.
Oh, congratulations.
Yes. And I take that honor for the millions of veterans who went before me.
Yep.
And the millions of veterans who came after. This is the lesson. We fought for our freedom. And we fight for the freedom to obey the laws and things like this. But it's probably the most important thing we have is our freedom. It's worth fighting and dying for.
Absolutely. And Robert, I thank you for your service, for doing that. And also for all of us that have read your books and really started our financial awakening with books like Rich Dad, allowing us to understand how the wealthy think and frame. And I think the takeaway of Money Disrupted, the documentary that you were so kind to appear in, is really that you should hold assets over liabilities and that those assets should be tangible and there should be things that you can hold long term.
Well, the biggest point is your biggest asset or liability lies between your left ear and your right ear.
Yeah.
If you go to school, listen to a Marxist, you're probably a Marxist.
Right.
So that's why you choose your teachers wisely.
Yeah, exactly. Well, Robert, thanks so much for showing up here. I know you have a busy schedule of media events and lots of people to go talk to, and you have an entourage following you around. You're a rock star here in Vancouver, but I'm very appreciative for the time you've given me, and you've made a big impact on my life, so I appreciate that.
No, and thank you for doing what you're doing, because that's what we fight for.
That's right. So
We fight for our freedom and hard, sound money.
that's right. All right. Thanks, Robert. Appreciate it.
It's fun, isn't it?
You will find the heart of America here.
The decline of American manufacturing jobs is a serious concern, as many companies choose to move their operations overseas.
How did this dramatic income inequality happen on such a wide scale?
I have directed Secretary Connally to suspend temporarily the convertibility of the dollar into gold or other reserve assets.
The U.S. came off the gold standard August 15th, 1971, when Nixon closed the gold window. Since then, we've had floating exchange rates with the rest of the world.
The majority of Americans don't make enough money to cover some of the basic costs of living.
Every day is a struggle for me, but I still have to worry about where my next meal is coming from.
Even eggs has gone up to $5 or $6 per day.
It all began in November of 1910. The Federal Reserve System was conceived. But all these years, we've had something which most people have thought was a government operation of some kind or another.
It's not. What is it? It's a cartel.
There's been massive money creation in the U.S. When they create a lot of money, that devalues our buying power. And this has gone on to such an extent that 40% of all the money that's in existence in the U.S. dollar was now created since the pandemic.
Here you go, guys. Let's play central bank, because it's even easier than what I'm showing you. Originally, when we were on a gold standard, gold and silver were actually the money.
The only way we get out of the rat race of inflation and endless money printing and debt slavery is to return to sound money principles.
Bitcoin's now 16 years old. It's never been hacked. It's an extraordinary invention.
This is just the beginning. A new era of financial freedom where individuals can control their own money.
As you know, I was a skeptic.
Yes!
I believe Bitcoin is legitimate.
I'm a believer in stablecoin, a believer in blockchain.
I think crypto trading is going to become the infrastructure layer behind real world assets.
We have to go back to sound money. We have to get our balance sheet in order. We have to stop irresponsibly spending money.
There's so many innovative technologies coming in, cryptocurrency, AI technology. What we should be doing is studying how to become an investor in those types of markets and those assets.
When I was in Zimbabwe, it collapsed, and these young kids come up with their AK-47s. And it's about taking your money. So when this collapsed, law and order collapsed. It's coming to America.
The rising cost of food is driving an affordability crisis.
Crime on the rise.
The rise in crime.
We have a pandemic of lawlessness.
And the Fed.
And the Fed.
We want to end the Fed.
And the Fed, let's go.
And the Fed. And the Fed. And the Fed.
So what a treat. Oh, can you tap on my face over there?
Yes, I'll tap your face.
Tap my face, please.
There you
Thank
go.
you. So I'm super excited about that. That was awesome. Sick having Robert Kiyosaki come to our booth live in Vancouver. How cool was that? You know, we talked a little bit about his history, you know, working in, you know, being a Marine and all the incredible things he was as a veteran. And he means so much to a lot of us in terms of, you know, what he's done in terms of the financial world and teaching us our assets over liabilities. What are your thoughts, Robert Kiyosaki? Have you read his books or
of course.
talked? Yeah,
absolute legend. And I was telling his team there too, the thing that I love about Robert is that he's a Vietnam veteran Marine. And that was my grandfather as well too. So to me, I love hearing stories from the good old boys who actually went and did the deed, you know, and fought for our country. And, you know, I appreciate Robert so much. I started with Rich Dad, Poor Dad. I find Robert's books have been so moving over the years for me. Like at points while I have done audiobooks for all of them. So I've never read the physical books, but audiobooks, listened to them multiple times. And I'll literally get moved. I've been moved to almost tears on a few of those just because it's so inspiring. When you start with Rich Dad Poor Dad, and I started on my entrepreneurial journey 10 years ago, right? And listening to his words and the mindset, when you come from a family that's not in business, not in entrepreneurship, my family, contractors, right? Blue collar background, right? So stepping into that mindset, and I've learned so much from Robert. It's an absolute pleasure to have him stop by the booth, and I'm glad I'll have to listen back to your conversation that you had with him.
Yeah, and I mean, it is crazy here because actually outside of the stream, for those of you watching, we can't really hear anything outside of what's happening just right here in the booth. But Robert's a big hero of mine. But then when I interviewed you, I was still on my journey last September building out the roster. And you told me one of your other heroes, and is what actually the hero in high school that brought you into, financial education space and thinking about, sound money and all these assets. And I have a clip of that person, let us know in below who you might think that is. But I had the great honor of meeting a lot of legends for this project. Zach's a legend. Robert Kiyosaki is a legend. And there are several other legends in here. So I'm going to play a clip from the documentary featuring one of the greatest legends in all of the space around sound money and really trying to move us back to an asset-backed economy.
To me, it was a big event. And I think it turned out to have been a big event. And we're continuing to see the downfall of that. And the answers have not been solved. Because in a way, what was happening that night was the official declaration that we were broke. There was a bankruptcy. So I told my wife I was going to run. And she says, "What are you going to do that for?" And I said, "I just want to talk about this money thing." She says, "Yeah, but it's dangerous." And I tried to explain to her, there's no danger just running. I'm just running. She said, "Yeah, but you're going to win."
With these three proposals, we could cut the 1981 budget by $60 billion, balance the budget, eliminate the off and on budget deficits, increase U.S. defense spending, and not change one domestic social program.
There's no way. I'm going to offer something vague like liberty, and people don't care. She said, "No, they'll believe you, and they'll like you, and they're going to vote for you." So she predicted really early on.
Okay, so I didn't know that, meeting you, I didn't know that was one of your heroes, Ron Paul.
Yep.
But talk to me about the first time you came into contact with, Ron Paul's message or whatever else. You had told me a story when I interviewed you, and I thought that was interesting.
Yeah, I read his book, And the Fed, and that's what woke me up to that institution, the private banking cartel. And it woke me up to what the real problem is. It's not Democrats and Republicans, although they do get in the way and obviously are holding us back. But it wouldn't be possible without the Fed.
Right.
So if you don't get to the heart of the issue, you can't address it. And I think that Ron Paul really woke me up back then. When in 2008, I still, was just entering high school, still figuring things out. But I came to discover Ron between that time and when he was running in 2008 and 2012. And he really woke me up. The military-industrial complex isn't possible without the Fed. This banking cartel and their grip on our monetary policy isn't possible without them. And ever since then, I've aligned with libertarian philosophies in many regards. And the other thing too that I align with on Ron Paul is I want us to have a strong military, but I don't want us to be the world's police. And I think that it's incredible because here we are in 2026, Chris. I thought that we were going to be much further along. Like I was naive back then thinking that we were going to actually get rid of the Federal Reserve before 2020.
Yeah.
Here we are in 2026.
I don't think it's going to go away that easily. Dude.
Yeah.
Yeah.
And so, it's, been a, crazy time just between first catching Ron and then where we're at right now and how much of he said has come true and how timeless his message has been this whole time.
Yeah. I mean, Ron really is like one of the OGs of, hey, we have an irresponsible monetary policy. So when I was pulling clips of him from all of the decades, right, I interviewed him. I got the chance to go to the Ron Paul Institute right outside of Houston and met with his team. And we started pulling clips of his original campaign back in the 70s, which is in the documentary.
Yeah.
And this guy's been talking about fraud, waste, and abuse since the very beginning of time. And he had in one of his first congressional hearings, it's in the doc, but basically he goes up and he says, you know, if we can cut all of our federal funding for foreign governments, USAID, or whatever they called it at that time, our foreign military bases, that, you know, you could have a balanced budget without cutting a single domestic program, and you could have everything without any new taxes. And I think that's a real wake-up call. And I thought about that recently when we had our most recent federal government shutdown, which maybe we're going into another one. I don't know.
Yeah.
We'll see. But I thought to myself, am I feeling anything? I mean, my heart goes out to the laborers, things like TSA and the FAA regulators who didn't get paid and showed up to work anyways to make our air traffic control happen. But if you walk around the streets when the federal shutdown was happening in the United States, I don't know that I could tell you that it felt like anything was happening, which then makes me feel like, where does all my federal tax dollars go? I'm not talking about your local tax. I'm talking about those federal tax dollars. So I think Ron Paul really illuminates, and in the documentary, he talks about this. We put a face to the deep state. And really what we're talking about, I know that sounds like conspiratorial, but the face of the deep state is lobbyists that get politicians into government and then pass favorable policies to get cashed out. And the reason why that's relevant to us is because that's the Rockefeller banking system. That is the system that allows us to basically get our folks and go out there and basically grab the money into their lobbyist firms and actually get those policies passed. So I'm going to play another clip of Ron, but I think it's a really, really tough issue we have. The Federal Reserve basically is the backstop. It allows for these politicians to pass the money and actually get the policies there. Lawrence Lepard, when I interviewed him, he basically said, you know, policy or spending is a third rail in politics. So you always have politicians saying things like, oh, I'm going to give you free programs. I'm going to offer you this free. That's what we heard from Mandami in his election. So I want to show one more clip of Ron Paul talking about that. And really the takeaway for all these things, Zach, is that the Federal Reserve is the tool by which these policymakers are able to print the money, which is why if you didn't have a Federal Reserve, you would not be able to infinitely print money. So let's go ahead and play this, and then we're going to set up for another interview. Zach's got another gentleman coming in here that he's going to be interviewing very soon for the Extreme, a new guest star. But I want to show one more clip of Ron, and then we will play one more commercial break, and then we'll actually pull him in, okay?
We printed a lot of money and we got more powerful. We could buy more weapons, and we encouraged pure democracy where all we had to do was get another special interest, go to Washington, and they would get money too. So the answer was always the Federal Reserve. The Federal Reserve that print the money. How long did it take the people in Congress to wake up to the slaughter of the 60s? You know, with Vietnam, that was a terrible time. So we elect a new president. We get Nixon because he was such a great economist on the cold side. And I think 34,000 Americans died after he was elected to stop the war. Realizing that gold is a litmus test. It's the blood of the economy, and it affects everything. If we didn't have a Fed, if we couldn't monetize it, and people were honest with their money, and if people were a little bit more moral about it, we'd have a lot of less wars and a lot of less poverty.
All right, cool. So we're going to be bringing in our next guest. I'm going to have Zach take over for me. So just give us about 30 seconds here. I'm going to play a brief clip of Zach. We never get tired of seeing Zach, right? A brief clip of Zach, and then Zach will take over for me, okay?
Judy Shelton and others have suggested gold-backed bonds. And I believe that the answer is gold and distributed ledger technology. When you combine the two, right, you have true God's money, store of value that's been respected for thousands of years. And then you have immutable distributed ledger technology that allows assets like gold to become more liquid. That's the only problem with gold, is that it's not as transportable as cryptocurrency. And so when you tokenize gold on the blockchain, you can provide transparency and trust, but you also have portability. And so I think it's a combination of bringing back gold and the gold standard, but doing it in a digital form. That's what appears to be underway right now with President Trump and the 250th anniversary. What's interesting to note too is that Rosie Rios is actually heading up that committee, and she's on the board of directors at Ripple. There's a very close connection already observed between Ripple, the Treasury, and President Trump for quite some time.
All right, folks, I am very excited for this conversation with Lobo Tigre. He is the founder and CEO of Louise James LLC, okay, formerly for KC Research. Now you are the principal analyst and editor of independentspeculator.com. It's an absolute pleasure to have you, Lobo. How are you doing today, sir?
$5,000 gold, $100 silver. You know, what other answer could I give but fantastic?
We're having a great time, aren't we? And so we've had a great conversation so far this morning with Andy Schectman, Robert Kiyosaki, and the consensus is that this isn't done anytime soon. And so just your quick hot take right as we get started here on the $5,000 ounce gold and $100 silver.
So the silver bulls and gold bulls always hate me for being the voice of reason. That's the last person anybody wants at a party, is the voice of reason to rain on the parade. I won't say that Andy or Robert are wrong. I will say that this is not a buy low time in the market space, and therefore just beware. At some point, you know, no price goes vertical forever. At some point, even if it breaks and then goes higher later, there has to be a change of pace. So, you know, you can start sending the hate mails to your audience if you like, but I'll go ahead and be the one to, if not rain on the parade, just call for some measure of reason.
Yes.
You know, bulls and bears can be right or wrong, but pigs get slaughtered.
Yes.
You don't want to be a pig. One last thing, and I'll you know, if you've been waiting decades for this and you've got huge unrealized gains, what's the worst possible thing that could happen? If it goes into reverse and they slip through your fingers, you waited for decades for this and it slips through your fingers, you got to look in the mirror for what went wrong. So I'm not saying sell, I'm not calling a top. I'm just saying nobody goes broke taking some profits along the way.
Absolutely. Amen. I think the reason why I'm excited to be here is to find where is there still opportunities. And we've heard from Rick Rule. He says that he sold off 80% of his physical silver, but he's rolling it into the equities. So do you think there's some opportunity in the room with us here today?
Opportunity, yes. Certainty, no. I thought that was very interesting on Rick's part. If you think that what's happening now means we're going into that blow off top phase of the markets, you know, silver lags gold at first and then catches up at the end of a bull market, it sure looks that way right now. Yeah. And, you know, people say, oh, well, silver hasn't hit a real all-time high adjusted for inflation, so we're nowhere near that. Well, but comparing peak to peak is not how you look at gains. You look at the gains from the bottom to the top. And if the bottom was in late 2015, and if you look at it from that bottom, that cyclical low, silver has indeed way overpassed gold on a percentage gain basis. So if that's telling you, and it looks to me like this is what Rick is thinking, we're in the blow off top phase, where does the dumb money go? The Johnny come latelys, the generalist investor who suddenly sees silver and gold everywhere on the headlines, they pile into the majors. They pile into the blue chips, the go-to names in this space. So what I've been telling people is, you know, I don't know what's going to happen next. But if I thought that's where we're at, we're in that blow off top phase, then that's what I would buy. And Rick has also mentioned not just silver equities, but during his selling last October, November, he was saying he was buying the blue chips. You know who they are, right? The top royalty and gold producers in the space. And that makes perfect sense. If the next thing that happens is just, you know, gold goes to 10,000 or what, silver hits an actual real all-time high, then those stocks will go nuts. And as a speculator, you know, that's not necessarily a bad thing. Now, it's also possible, however, that we wake up, well, actually it's Sunday now. I don't know when this is live. So
we're live.
Yeah, so we go and we look at this trading start tonight and gold and silver tank. And they just go down all week because, I don't know, because Trump tacoed out on Greenland or whatever excuse they give for the moment, right? You know, if things go into reverse, that speculation could result in a lot of pain in the near term.
Yeah.
So again, I'm not saying don't do it. I'm saying it's not a buy low opportunity. And if you do it, you should have a hair trigger sense on taking profits if the market looks to turn.
Folks, I probably didn't do a good enough introduction either, Lobo. Just for those who don't know who you are and why you're brought to Vancouver every weekend or every year to speak, you've been in the space for decades. Can you just give us a little bit of your background here real quick before we proceed?
Sure. My joke on this is that I'm the cheap Mexican knockoff Doug Casey. The legendary speculator Doug Casey hired me 2004. So a little over 2 decades. And yes, my family is from Mexico. So I can say that with pride. And, Doug's like 6'2", or he was, whatever. He's a big guy, and he was tired of hitting his head on these rocks and these old colonial mine tunnels and stuff. So he hired me to be his due diligence guy and go check these things out. So I did that for a decade and a half. And now I do it on my own as the independent speculator. And by the way, Doug's newsletter was the International Speculator, RIP. So when I named it, I asked him if he was okay with that. He gave me his blessing. So there's still an IS out there.
Good.
Under my care.
Okay. And so you've been researching the space for decades here. Where are you invested right now, if you could speak to that?
Well, I am right now still massively long gold and silver, uranium, mainly those three, probably more gold than anything else, then uranium, then silver. And I also have a bit of copper because I thought copper would do well in 25. It did okay, all-time high, nominally at least. Not so bad, but of course, silver and platinum put copper to shame on a percent gain basis. But and I have a smidgen of oil, just tiny smidgen. So that's where I'm at now. Where I'm looking to go, this is sort of stealing my thunder for my talk ahead. I started out by saying gold and silver are not a buy low opportunity. Not calling a market top. I'm just saying you can't argue that this is the stealth phase where nobody knows, right? The most hated thing in the world. Whereas oil does qualify. Nobody wants to hear about oil. OPEC is increasing production. If you listen to Doomberg, oil equivalents are going to flood the world. Oil is like the new silver. Maybe coal is worse than oil. But oil is a more globally fungible market. It's easier to invest in oil because a barrel of oil is a barrel of oil, whereas, coal in Newcastle is different from coal in BC or whatever. They're more regional fragmented markets. So I'm liking oil a lot. It's on my current shopping list right now. It's oil.
Are these ETFs for the commodities, or are you in the equities?
I'm definitely a stock picker.
Okay.
Maybe I'm just arrogant. I don't want some guy with a spreadsheet making my investment decisions, but I'd rather pick my own stocks.
As you go around the conference here and as you evaluate these companies, what are some of the main metrics that you're looking for? One thing that I am worried about is jurisdictional risk. As somebody who is first now stepping in, I have had silver and looking now at the equities. And yes, I'm probably a little bit late, definitely not a bottom, right? But selfishly, I'm trying to learn from legends like you that have been in the space for decades. What are the questions that you're asking these guys? What are the metrics that you're looking for? And how big of a jurisdictional risk are you considering?
So it depends on the type of company and metrics, jurisdiction, different things. So let's tick through some of these. I'm very risk averse on jurisdiction. And I know Rick Rule likes to say, it doesn't matter the color of the skin of the person who steals your money. It's just as stolen. That's very noble sentiment on his part. But, you really don't have to worry about Ebola in Ontario. And, Nevada is not AK-47 Central. And that does matter. I am willing to pay, not a premium. I always want a discount. No discount, no buy, no deal for me. I want a discount to NAV or NPV or something, even hypothetical value, right? But I'm willing to have a smaller discount in a safer jurisdiction. And of course, that includes not just like physical safety, but political rapaciousness on the part of the government. And, if gold's going to go from 2,000 to 3,000 to 4,000 to 5,000, you could say, oh, well, you're overpaying for a safer jurisdiction. But in an environment like that, I'm going to make money.
Yes.
And I'll sleep better at night. Right? Even if gold goes to 10,000 next month, if my project in Mali gets nationalized or in Burkina Faso gets overrun by communist insurgents or something, right? I'm toast anyway. It doesn't matter what the price of the commodity does. So I'm pretty politically risk averse, and I'm willing to pay a little bit more to be able to sleep well at night. In terms of metrics?
Well, while we're on jurisdictional risk, if I can, are you concerned with even countries like Canada and others that are needing to play catch up here, right? I'm from the States, by the way. So, we're
and
having,
they let you in?
Yeah, it's unbelievable. I can't believe it, right? Every time I sneak up here, I am amazed. They're starting to have conversations back home about strategic reserves. nationalizing mines, production, etc. So these jurisdictions, which historically have been safer, are you at all worried that that might not be the case anymore for jurisdictions like Canada or others?
There's multiple levels of this. You know, you look at governments doing something which is really not free market capitalism. You know, it's fascism is such a heavy loaded word, but that was actually the hallmark of Mussolini's fascism, was this public-private partnerships like this, and the state was going to direct. Yeah, you could own the businesses, but we'd tell you what to do. Right? And this does not sit well with me. But obviously, if you have a gotta have it customer like the military that's price insensitive, for the people that actually got it, that makes some sense. But of course, those ever so fearsome words, "I'm from the government, I'm here to help," should never be underestimated. And what the government giveth now, it can taketh away after the next election. And so this whole thing does make me nervous. But the other thing is, especially if you have criticisms for your government, whether it's me in the US or a Canadian up here or wherever you are, it seems like our government is always the worst, right? And we're the ones who are most quick to criticize our own government. And therefore those other guys over there don't seem so bad. But that's not true. I think we look at crazy things the NDP is doing, right? But you know what? People have still been able to mine in Canada. It hasn't gotten that crazy. So maybe the takeaway here is don't listen to what they say, look at what they do. When they start actually doing things that are hostile for shareholders, right? That's really, for us as speculators in the market, that's the key thing. Like if the United States government or other ones intervene to secure critical minerals, well, great, that might help the mineral on the open market globally. But if the company producing it gets taken over, is that going to be great for shareholders? Or let's say it's the not taken over, but if the United States government is a major stakeholder in this company and is kind of calling the cards, it has a seat on the boards, is their priority going to be returning for shareholders, or is it going to be securing the metal for the military or the data center or whatever the need is?
Right.
So, this does make me nervous, but at the end of the day, it's not like, a West African country that has a history of coup d'etats every other year.
Right. Okay. So, and I appreciate your point about maybe paying a slight premium for jurisdictional security, and that makes sense. So now, metrics, the questions that you're asking these guys as you conduct your research and due diligence on new opportunities.
Therein I could write a whole book. A couple quick things would be, for producers, it's pretty simple. I'm not saying it's just one variable, but the one starting place is very easy. Are you making money or not? If you're not profitable, and let's say if you're a gold or silver and you can't make money at $100 silver or $5,000 gold, there is something really wrong with your company. I'm sorry. There's just no way that you can have a good mine and not be making money right now. That's maybe not too likely, but I would look at maybe the history of profitability. If you had a great quarter in Q4 25, great. But how did you do the rest of the time? And you know what? If you're in production now, your mine was probably built assuming $1,700 gold, maybe an aggressive assumption of $2,000 gold. If you're already in production, that mine was built under a much lower price scenario. So, okay, 5,000, everybody's making money. Were you making money at 4,000? If not, you should have been. Were you making money at 3,000? You should have been if your mine was designed at 2,000. And you could say costs go up. That's my refrain, but the number one cost is energy, and oil's been going down over the same time.
Right.
So copper, also uranium, also higher prices. If you're a going concern now, you should have a track record of profitability. And if you don't, I'm done. I don't even need to ask any other questions. Right. So it's a very simple litmus test now for producers. For developers, I want to look at the NPV. Do I still get a discount to the supposed value of this? And here, there's a temptation, and I've heard some pundits saying, gold's $4,500. It's ridiculous to have a price assumption of only $2,000. Well, no, it's not. Because if your mine has a 20-year mine life, okay, let's say gold stays at $5,000. Your costs are gonna catch up. So right. you can't look at the difference of 5,000 versus your cost. So there's a good reason why the industry uses a 3-year trailing average of prices to see whether or not your project is feasible. And really, if it's a long life project, you should be looking like a decade average. Some of these big copper mines, they take a decade to pay back.
Right.
So you can't say, oh, $6 copper, well, this mine is super profitable. Well, by the time 10 years from now you pay back, what's going to be your cost of energy, steel, tires, everything else. So for developers, I still want a big discount to the supposed, net present value of the project. For explorers, there really is no value. There's no metric as such. I look for a couple of things. One is what I call the pre-production sweet spot. Not my term, the industry standard. But there's a difference between literally pouring money into the ground, drilling holes to see if you have something, and getting money out of the ground when you have a mine, you're mining, and the market does a re-rate there. This is highly reliable. And the gain, to my knowledge, I'm the only one that, or the first one perhaps, to measure this. And it's quite extraordinary. The gain is something on the order of a double. Not a 10-bagger, not a 100-bagger. But here's the thing, the gain is on the order of a double, and 95% of the companies that set out to build their first mine do it. The trouble happens after you build the mine, but the re-rate happens when you build the mine. This is a thing of beauty for a speculator. So there's an extraordinarily high probability, not certainty, of at least a double, which is, the other thing I like in exploration stage is, so pre-production sweet spot, that's developers, exploration. I have something I call success in progress. And the idea there is that nobody knows who's going to make a discovery. Not Doug Casey, not Rick Rule, certainly not me, And if you have a lot of money, you can throw a very broad net and you can capture all these people who make fantastic discoveries. Most of us can't do that. I'm not a billionaire, so I can't buy them all like Eric Sprott. So what I do is I give up that first discovery hole gain, which can be spectacular, an overnight double, right, on a smoking hot drill hole. But even a smoking hot drill hole can turn out to be nothing. It might just be by bad luck they drilled down the long dimension of a very small, insignificant thing in the ground. But after you start hitting this thing, like first result, second result, third batch of drill results, and it's still getting bigger, that's what I call success in progress. And there's huge value to be made between that discovery hole and when you've drilled off a deposit, you're starting your feasibility work. It's the first part of the Lassonde curve. That's not one day. It's not one drill hole. It's usually a couple of years of drilling off something that's actually there. And that's putting the odds in my favor. Not a metric, but it's something that I'm looking for. I'm looking for success in progress and a gleam in a geologist's eye. It's got to be this big. That doesn't count.
And so how much, where's your allocation as far as producers, exploration, etc.? How are you divvying that up?
I see that as kind of my own barbell strategy.
Okay.
Nassim Taleb, I have an anchor in some producers, some of the big producers, because those are the least volatile and they give me some leverage to the underlying commodity. And then I'm skewing towards the other end of the spectrum. I don't own a lot. I don't think I own any mid-tiers. And it's not that they can't do well, especially if they're single asset types that get taken over, another Rick Rule favorite. But I'd rather just have this relative safety of a couple of the blue chips and then skew towards earlier on the spectrum, the success in progress plays that I was talking about, and the pre-production sweet spot plays a little bit farther along the Lassonde curve.
I see. Okay. And when you're looking right now, central banks and this whole rally just seems to be, the fundamentals are there, but one of the big outliers and themes that we're witnessing right now is just the lack of trust in every institution, where it be political, central banks. And so how much are you paying attention to what the Fed's going to be doing here, quantitative easing, interest rates? How much does that play into your thesis?
Marginal. Like, as you mentioned with the central banks, and it is kind of funny if you think about it, Goldbugs has spent decades hating central banks. And now central banks are our best friends. They're buying gold. There's, I don't actually think the central banks have sent gold higher. I think they've prevented it from ratcheting down. And that has been a game changer. Absolutely no question in my mind. That is a game changer.
That's exactly what Andy Schectman said about margin requirements going up. These guys aren't using margin. Yes. And so they're just soaking it all up and they're keeping it from coming back down. Right. It's funny that you mentioned that as well.
Oh, not so funny. It's true.
Yeah.
Hopefully. But yes, no, that's, but the important thing about this is like we will, if that ever changes, if or when it changes, we'll see it. So you won't have to flounder around and guess or whatever. And until that changes, let's put it this way. 2 years ago at this conference, when uranium had gone triple digits, the hockey stick chart, I was the one everybody hated on the uranium panel saying, nothing goes up forever, straight up. Taking some profits isn't a bad thing. Some correction would be expected here. And everybody moved away from me on the Group W bench.
I remember that panel.
Oh, do you?
I remember watching it.
Right. I would normally be saying that about gold and silver now. I mean, it's absolute hockey stick. But this central bank thing is really that big a game changer. And you've also got just sort of not just retail, but really deep-pocketed investors around the world. Really, the scales have fallen from their eyes. And gold still is a four-letter word, but it's that change of perception. The world is not the happy, safe place where globalization makes everybody richer anymore. We have globalization going into reverse. We have geopolitical risk like nobody would believe. Even if Trump goes away in 3 years, that's 3 more years of Trump. And whether you love Trump or hate Trump, he's certainly an agent of change, if not chaos. So, in a world like that, how many people with, big money, deep pockets, how many people are going to look at that world and say, yeah, I don't need no safe haven assets. Everything's fine. Like that SpongeBob meme with the fire, everything's fine, right? Who in their right mind would do that? So having been burned by people who were sure that gold was going to keep going screaming up in 2011, I'm very cautious about saying, it has to keep going up. But what I'm saying is I'm looking at the world we're in. They're not my model. I'm looking at the reality of what's going on in the world. And I see a lot of downside protection. Like in that world, who's going to just wake up tomorrow and sell all their gold? I just don't see it.
And so what would you say to folks that are sitting in a traditional 60-40 portfolio? They have no exposure to any of this, not physical, no equities. What would you say to that person?
For that person, I would say buy some today.
Yeah.
No question. Even if it was gone like this, it's kind of interesting. You've got Morgan Stanley saying, forget 60-40, it should be 60-20-20, yes, and other things. Like, what a world. Like, you talk about game changers. This is mainstream, not tinfoil hat, guys in their bunker in Idaho, gold bugs. This is the mainstream of the mainstream saying you should have some gold in your allocation. And big numbers. Jeff Gundlach scaled his 25% is not excessive down to 10%. But if big money went 10% to gold, it would blow the market out of the water.
Right.
And other things like that. So, but at the end of the day, I don't own gold bullion. We're talking gold and silver themselves now, not the stocks. I speculate on the stocks. But to me, the bullion is not a speculation. It's not even an investment. I don't buy it because I think it will go up. As Rick Rule says, I buy it because I'm afraid it will go up, right? And it's insurance in case of a rainy day. And so what is if you're looking around the world and there's no fires anywhere, maybe you don't worry about fire insurance. But like we were just saying, deep pockets are looking all around the world now, and they're seeing fires everywhere. So at that point, is your first question really how much is the fire insurance? Or is it really, I got to get some fire insurance before the fire hits?
Yes.
Because after it hits, you don't care what the insurance would have cost. You wish you had it. Mm-hmm. The time to buy insurance is before the house catches on fire. And there's fires all around the world. So hear me clearly here. I am not saying if you buy today in Australia or somewhere that's the market's already open, that you will make money or that it can't go down tomorrow. That's not what I'm saying. I'm saying in our world, if you don't have any fire insurance with fires breaking out all over the place, gold and silver are history's most tried and tested fire insurance. And I'm not even anti-Bitcoin. I don't know if I'll get hate for even mentioning Bitcoin. I'm not anti-Bitcoin, but Bitcoin didn't even exist in the GFC in 2008, let alone 1987 or 1929. So you don't have to hate Bitcoin to just point out, look, it's untested.
Yeah.
Whereas gold and silver are tested over millennia.
Yeah.
Right. So that's my answer. So I feel absolutely no hesitation at all to tell somebody who's completely out of this market, you want at least a finger in this pie.
Yeah. Yeah. Well, it's interesting you mentioned that because just outside our event here right now, I'm being told that there's tens of thousands of people protesting right now. We're seeing back home in the States, political strife, internal chaos. And in this changing world order and all of this chaos that we are having, one thing that makes sense is gold and silver being at all-time highs and not seeing any significant pullback from here. I mean, even a short-term correction or taking a break would be normal, right?
Yes.
But any big drawdown, I just don't see it. Central banks aren't sellers at these levels. These big hedge funds, sovereign wealth funds are not sellers at these levels. We only need more and more silver, copper, and some of these other industrial metals too. And so, final thoughts as we close off here, just as far as with all of this chaos and the changing world order, are you finding safety specifically just in gold and silver, or are you looking at anything else, real estate, any other asset classes that you're hedging with?
Let me answer it this way. People have said, well, why would I take any profits? Why would I sell anything? I think it's going higher. Even if it corrects for a while, it'll go higher. So why would I sell anything? Well, one, what if we're wrong? The smartest people I knew in 2011 were sure that gold was going straight to $5,000 because the GFC was, now that looks like a foothill to the higher peaks we're seeing today. But at the time, it was off the charts, unprecedented. Everybody was sure. The dollar was going to zero, gold was going to the moon, and yet a 5-year bear market ensued. So, no profit is an actual profit until you realize some gains. And so in terms of what you're saying and finding safety, so people are saying, well, if you're going to sell your gold and silver stocks, what would be better than that? What would you do with that? Well, I'll tell you what I did with that. I paid off my mortgage. Right? And in terms of feeling, let's say the whole world goes crazy, AI takes over my job or something like that. I have no mortgage. All I need to do is make enough money to pay for some food and gas, and I'm okay, right? So, and it's a real asset. Government can't print another house for me or something, right? It's a real asset. So the short version is just, I'm enthusiastic. We've just talked about many reasons to be very bullish, but pigs get slaughtered. Nobody goes broke taking some profits. That doesn't mean you're a traitor or you lack conviction or something. It's just that if you don't realize any gains and they evaporate from your hands, then it's the mirror where you need to look for fault. I'd rather sleep well at night in a house that's paid for.
Yeah. I can appreciate that too. And Lobo, thank you again for joining us here. I look forward to, pleasure to meet you. I look forward to getting you back on my show at some point in the future.
Even though I had the disgrace to be a voice of reason.
Well, we need a voice of reason in the party. We do. We like to have a good time, but somebody needs to make sure we get home safely.
Yes.
Right?
I'm the designated driver. There you go. That's my new handle.
Lobo, we appreciate your insights. For anybody who's looking to find you, where can we find your content?
independentspeculator.com. Real quick, there's a free weekly newsletter. The one thing I can promise, whether you like it or not, I promise that we will not spam you with a flood of daily advertisements. I hate that. You get one email per week notifying you that we publish the digest, and then you can decide what else you're interested in.
Okay. Well, there you have it, folks. Lobo, we appreciate you for coming on, and we'll get you back soon.
Thank you, Zach.
All right, guys. We're going to keep this stream rolling here for another minute. Chris, you're going to join us. Yep. Hit a scene.
All right, cool. All right, live production. This is how it goes. I'm here to show Zach how the computer operates. So here we go.
You will find the heart of America here.
The decline of American manufacturing jobs is a serious concern, as many companies choose to move their operations overseas.
How did this dramatic income inequality happen on such a wide scale?
I have directed Secretary Connally to suspend temporarily the convertibility of the dollar into gold or other reserve assets.
The U.S. came off the gold standard August 15th, 1971, when Nixon closed the gold window. Since then, we've had floating exchange rates with the rest of the world.
The majority of Americans don't make enough money to cover some of the basic costs of living.
Every day is a struggle for me, but I still have to worry about where my next meal is coming from.
Even eggs has gone up to $5 or $6 per day.
It all began in November of 1910. The Federal Reserve System was conceived. But all these years, we've had something which most people have thought was a government operation of some kind or another.
It's not. What is it? It's a cartel.
There's been massive money creation in the U.S. When they create a lot of money, that devalues our buying power. And this has gone on to such an extent that 40% of all the money that's in existence in the US dollar was now created since the pandemic.
Here you go, guys. Let's play central bank, because it's even easier than what I'm showing you. Originally, when we were on a gold standard, gold and silver were actually the money.
The only way we get out of the rat race of inflation and endless money printing and debt slavery is to return to sound money principles.
Bitcoin's now 16 years old. It's never been hacked. It's an extraordinary invention.
This is just the beginning. A new era of financial freedom where individuals can control their own money.
As you know, I was a skeptic.
Yes!
I believe Bitcoin is legitimate.
I'm a believer in stablecoin, a believer in blockchain.
I think crypto trading is going to become the infrastructure layer behind real world assets.
We have to go back to sound money. We have to get our balance sheet in order. We have to stop irresponsible spending money.
There's so many innovative technologies coming in, cryptocurrency, AI technology. What we should be doing is studying how to become an investor in those types of markets and those assets.
When I was in Zimbabwe, it collapsed, and these young kids come up with their AK-47s, and it's about taking you.
All right, everybody, we are here live in Vancouver. I have my co-producer and wife, Maya, who's here on the stream. Maya and I actually made XRP Unleashed, for those who are familiar with that film, also known as Rigged from the Start. That was our documentary on the XRP piece of things, you know, what was happening with the SEC's battle against crypto. And Maya's the whole reason why we are in crypto. So we are here in Vancouver. Maya, welcome to the stream.
Hello. How's it going?
She's so excited.
I'm just excited to be here. This is such a cool event and a great setup. So love it.
It's cool to see all of the live gold trading. I mean, obviously, for those of us that hold, you know, precious commodities, you're very exciting time to be at all-time highs. There's probably some of us holding crypto, XRP, different things, Bitcoin, maybe thinking to ourselves, oh man, I wish I had some silver right about now.
Yeah.
But it's all a cycle, you know, one into the next, one into the next, one into the next. So kind of talk to me, Maya, about our journey on Money Disrupted. You know, we've been making this film for the last year. We're on the final leg of it. We have documentaries from, or we have interviews from Zach Rector, from Andy Schectman, Lynette Zhang. Tomorrow we're going to be live with her. We have Robert Kiyosaki and Ron Paul.
Right.
What's kind of been your side of the journey in making this movie and trying to get all these people? And just so you know, Maya really is the co-producer. She comes in and she probably is the one who runs all of my text messages and everything else while we're making this film.
That is true.
She runs, you know, is a much better communicator than I am. So I just kind of want to give her the shout out for that and co-producing. And, you know, it's a big effort to make a big project like this. You know, some days you might be on the ground. Some days you're like, I don't know how we're going to do this, how we're going to make this movie. We're not you know, this is it. It's us two. Plus all the people we have in the documentary. It's really just myself and Maya sitting at the editing desk every day trying to make this film to tell the truth about our monetary system and the future of what's coming and the crimes that have been committed in the past. And it's very difficult to do that because Hollywood doesn't really like these stories. So Maya, what's kind of been your energy as we've been making this movie?
No, I thanks for having me on. Yeah, just as Chris said, it's been quite the journey. You know, we really appreciate the support from the community. We couldn't do it without you guys. And, you know, it's exciting to, you know, especially the thrill of, oh, all right, we got an interview with Ron Paul. We got an interview with Robert Kiyosaki. You know, these are legends in the space. And we just, you know, the universe is kind, right? I want to just encourage everyone just to believe in whatever they're doing, because dreams do come true. This is an amazing experience. And we're just so glad to be able to share it with all of you. And yeah, we're excited to be releasing the film on February 19th from our website, fruitionproductions.com. But I would have to say, I just met Robert Kiyosaki. I was so disappointed the first time around when Chris got to interview him, and I did not get to go. And so it was great to meet him. He's a funny guy, you know, has a lot of energy, and he's absolutely awesome. And then Andy Schectman was also a great guy. But yeah, it's an interesting process. So thank you all. And I just wanted to get on, say hello. As you can see, it's very cold up here in Vancouver.
It's
So
Canada.
it is Canada, and so
and most of the country is very cold back at home.
it
in the
is.
States,
I hope
so.
all of you are doing well. So, but yeah, and I'm just glad we were able to get through customs, right, with all of our camera
Yeah,
gear.
yeah.
But
let me play a little clip of Robert.
Okay.
One part of his interview here. He tells a lot of great stories. Here's a little clip of him talking about affordability in America.
My name is Robert Kiyosaki. I wrote a book called Rich Dad, Poor Dad, and my world changed. And the reason I wrote the book was I could see this coming. And we're facing one of the biggest economic transitions in world history.
Wealth and income inequality are the biggest moral crisis. Assets put money in your pocket whether you work or not.
When you print money, the middle class gets poorer because what goes up is inflation on food, milk, chicken, eggs, and things like this. Whereas when you print money, I have gold mines, silver, oil, land. So the rich get richer when you print money, and the poor middle class get poorer, the fake money. And that's why what makes me really sad is, I see homelessness spreading because inflation is hitting life.
Yeah.
hey, there's that eye. There's that eye. I just want to say, the inflation part. We're from LA, and you do see a lot of what's going on around the world, and we just hope knowledge is power, and this is why we want to give back. We want to give people the opportunity to become self-sovereign. Please, take the time to do the research, look into the gold, silver, crypto. But go ahead. Sorry, Chris.
Oh no, you're right. I mean, the whole takeaway is it's a compact package. It's a package of all of the knowledge,
right?
And it's all connected, right? The reason that we have so much inflation is because the federal government is able to print unlimited money because of the Federal Reserve,
right?
Which has a sort of monopoly from the banking industry on wanting to flush as much money through the system as possible, which is why when I interviewed Ron Paul, he was like, this is just get another lobbyist. That's what the deep state is. It's another lobbyist that puts up a fake candidate, gets that candidate elected based on some special interests, and basically try to go get a package of money so that we can go pay $200 for a toilet, or $500 million on toilet paper, or, $22 billion on homelessness in California, which is $167,000 per homeless person. We have nothing to show for it, right?
Right.
So there is an interconnected nature of the history of our monetary crimes and the wars that we went on to secure oil as a way to prop the United States dollar up.
Right.
And then I don't think we really had an out until blockchain came along.
Mm-hmm.
And I think that the blockchain combined with the rise of China building the new Silk Road, which Andy talks about in the documentary, is really the way by which we are forced to move to an asset-backed economy from a debt-based economy. Lynette does some great job of explaining that, and I'm going to have her on tomorrow's live stream, live from Vancouver.
That's going to be so good.
She did some incredible explaining about how physical gold and silver in your possession is one of the best things you can do for yourself.
Right.
And really, I'm excited to look at how we bridge the gap from precious metals, real assets, tangible assets, to the blockchain,
to the tokenized,
which I believe is transition, right?
Oh, most definitely. And actually, I've had the opportunity to walk around and just kind of check out some other booths, and just even having a few conversations with other, people here. I still don't think they're caught up on that, the blockchain and tokenization, all of that.
Yep.
And so I'm hoping to educate and get people thinking about that, even here at the Gold and Silver Commodities convention here.
Yeah.
So,
well, there's the camps. There's tribalism in blockchain. There's tribalism in crypto. There's certain people who are very heavy XRP.
Well, gold people don't really like crypto that much.
The gold people don't like Bitcoiners. Bitcoiners don't tend to like XRPers.
Right.
And the communities have these feuds. But I think what I am trying to do with the storytelling in this documentary,
Mhm.
in the whole concept of Money Disrupted, is we are a united force against fiat money,
Right,
right? And
right.
fiat money simply means it has value by a decree, right? So
Right.
fiat is money has value by decree, but nothing else.
Right,
And
right.
so I think that we're trying to get all of these incredible speakers together to explain that history and make sure that everybody, knows this. And you're not going to get that in a regular, Hollywood situation. So for those that have purchased the film, we really appreciate it. We'll continue to make it available in more places. But it means a lot to us that you're watching our content, that you watch Rig from the Start or XRP Unleashed, for those that watch that documentary, and for Money Disrupted. And we have many other projects in the
Yes,
pipeline.
we got
Some
many
real
more.
real juicy things we'll be announcing on the horizon line. A lot of it around the theme of fraud, waste, and abuse in the government, and exposing what we believe is, the ongoing waste of our tax dollars, And so, anyways, I want to thank everybody for coming and watching the live stream. That is all for today's programming. We will be doing some more recorded interviews later today, and we'll be releasing those in the socials. But for those that joined the stream, thank you so much. And Money Disrupted launches on the 19th of this month of February.
All right. Thank you so much. Appreciate it.
Thank you. And for one more time, we're just going to go ahead and play the trailer. For those of you who've ever seen it, we'll just close out with that.
Sounds good.
You will find the heart of America here.
The decline of American manufacturing jobs is a serious concern, as many companies choose to move their operations overseas.
How did this dramatic income inequality happen on such a wide scale?
I have directed Secretary Connally to suspend temporarily the convertibility of the dollar into gold or other reserve assets.
The U.S. came off the gold standard August 15th, 1971, when Nixon closed the gold window. Since then, we've had floating exchange rates with the rest of the world.
The majority of Americans don't make enough money to cover some of the basic costs of living.
Every day is a struggle for me, but I still have to worry about where my next meal is coming from.
Even eggs has gone up to $5 or $6 per day.
It all began in November of 1910. The Federal Reserve System was conceived. But all these years, we've had something which most people have thought was a government operation of some kind or another.
It's not. What is it? It's a cartel.
There's been massive money creation in the U.S. When they create a lot of money, that devalues our buying power. And this has gone on to such an extent that 40% of all the money that's in existence in the U.S. dollar was now created since the pandemic.
Here you go, guys. Let's play central bank, because it's even easier than what I'm showing you. Originally, when we were on a gold standard, gold and silver were actually the money.
The only way we get out of the rat race of inflation and endless money printing and debt slavery is to return to sound money principles.
Bitcoin's now 16 years old. It's never been hacked. It's an extraordinary invention.
This is just the beginning. A new era of financial freedom where individuals can control their own money.
As you know, I was a skeptic. Yes! I believe Bitcoin is legitimate.
I'm a believer in stablecoin, a believer in blockchain.
I think crypto trading is going to become the infrastructure layer behind real world assets.
We have to go back to sound money. We have to get our balance sheet in order. We have to stop irresponsible spending money.
There's so many innovative technologies coming in, cryptocurrency, AI technology. What we should be doing is studying how to become an investor in those types of markets and those assets.
When I was in Zimbabwe, it collapsed, and these young kids come up with their AK-47s, and it's about taking your money. So when this collapsed, law and order collapsed. It's coming to America.
The rising cost of food is driving an affordability crisis.
Crime on the rise.
The rise in crime.
We have a pandemic of lawlessness.
And the Fed.
And the Fed. We want to end the Fed.
And the Fed, let's go.
End the Fed. End the Fed. End the Fed.